Thank you, Neo. Thank you. Amazing, as usual. Your Royal Highnesses, dear world excellencies, dear members.
القادة العالميون، أصحاب المعالي، الضيوف الكرام، الأصدقاء الأعزاء، مرحبا بكم في الرياض ومرحبا بكم في النسخة 9 من مبادرة مستقبل الاستثمار. الآن نعم، أنا أعرف أن بعضكم يفكر انتظر للحظة، ربما لم تترك المعهد السنة الماضية. لا، قمت بذلك، ولكن ربما القدر أو ربما رئيس المؤسسة ربما كان له قول آخر، ربما تقاعدي استمر وكأنه استراحة قهوة سعودية. ولكن بعيدا عن المزاح، أنا هنا اليوم وأشعر بفخر كبير وبمشاعر طاغية، لأن الأمر ليس مجرد افتتاح جديد، ولكنه وكأنه عودة إلى وطني، إلى مجتمع بنيناه معا بشغف وباقتناع وبإيمان راسخ أن بإمكاننا أن نغير العالم. عندما أنشأنا مبادرة مستقبل الاستثمار كان حلمنا بسيطا، أن نجمع صانعي قرارات العالم، ليس للتنافس ولكن للتعاون، ليس لمجرد التحدث عن المستقبل ولكن لتشكيله. وانظروا إلينا الآن، هذه السنة نرحب ب9,000 وفد، بما في ذلك 2000 عضو، الكثير من الوسائل الإعلامية من كافة أنحاء العالم. سجل تاريخي في تاريخنا، وموضوعنا مفتاح الازدهار يشكل العالم، لأن الجميع الآن يسأل نفس السؤال: كيف بإمكاننا أن نبني مستقبلا أكثر استدامة وشملا وإنسانية؟ وبالتحدث عن الشمل، إن مبادرة مستقبل الاستثمار هذا العام أكثر شملا، حيث سنرحب بقادة المنتدى الاقتصادي العالمي. حان الوقت ليأتي ليرى بنفسه أنه الأمر هنا أكبر مما كان يتوقعه، وأرحب بهم هنا، وأتمنى أن تستمتعوا كثيرا بكتيب الازدهار الموجود، كتاب الازدهار الموجود على مقاعدكم، ومتاح كذلك كنسخة رقمية. وكذلك أشكر كل أصحاب الرؤى والمنظمين والمشاركين الذين شاركونا في معنى الازدهار الحقيقي، حيث في الأيام القليلة القادمة سنستكشف المسارات الجديدة للتمويل والإبداع والشجاعة، وهذا ما يمثله مبادرة مستقبل الاستثمار. أفكار تمضي قدما بالعالم. لكل قادة العالم والمفكرين والمبدعين، أدعوكم لتروا هذه الفعالية ليست كمجرد فعالية، ولكنها حركة تدعم الحركة الجريئة في الصحة والذكاء الاصطناعي والتنمية البشرية. هذه المبادرة يمكن فقط أن تنجح إذا كان كل منكم أعضاء هذه الحركة أن تعتنقوها وأن تتبنوها وتجعلوها وكأنها أفكاركم. إن حركتنا الآن ليست مجرد حركة، ولكنها أداة جديدة، بوصلة جديدة لمبادرة مستقبل الاستثمار. قمنا بإعدادها لكم. قوموا بتحميل البرنامج، وأطلقناها أمس، وصدقوا أو لا تصدقوا في أقل من ساعتين كانت هنالك 3,000 اتصال بالفعل حدث بينكم. لذلك بوصلة الذكاء الاصطناعي لمبادرة مستقبل الاستثمار تساعدكم على التواصل مع الأشخاص المهتمين بناء على الأهداف الاستراتيجية، وتسمح لكم بمتابعة كل جلسة كبث حي بملخصات ومرئيات في الوقت الفوري. مبادرة مستقبل الاستثمار تنتمي لنا جميعا، وهي قوة تأتي من عملنا الجماعي. وأعبر عن شكري لمجتمعنا الدولي والعالمي وداعمينا وشركائنا، وكذلك فريقه مع هذه مستقبل الاستثمار وأسرتنا كجزء، وكذلك جزء من سنابل الاستثمار، مع التفاني الذي يأتي بهذه الفكرة ويبث فيها الحياة سنة بعد سنة. شكرا جزيلا لكم. وكذلك أشكر أصدقائنا في الجهات الإعلامية، شكرا لكم دائما على رواية وسرد قصتنا بشغف ووضوح وأحيانا بدقة، ونشكركم على صناعة هذا التحول. وأشرف بأن أرحب على المسرح بالقائد العالمي الذي رؤيته تواصل إعادة تعريف الاستثمار للأثر، رجل شكلت قيادته مبادرة مستقبل الاستثمار وألهمت التقدم حول العالم، وبالطبع تحت توجيهات صاحب السمو الملكي سمو الأمير محمد بن سلمان. رحبوا معي رجاء بمعالي ياسر الرميان، محافظ صندوق الاستثمارات العامة ورئيس مجلس إدارة ورئيس مبادرة مستقبل الاستثمار، للافتتاح الرسمي لهذه النسخة التاسعة من المبادرة. صاحب المعالي، اسمح لي أن أعطيك هذا المفتاح، مفتاح الازدهار. شكرا لك. أصحاب السمو والمعالي، السيدات والسادة، مرحبا بكم في النسخة التاسعة من مبادرة مستقبل الاستثمار. من المذهل أن أرى كل هؤلاء القادة ذوي الرؤى الذين غيروا العالم وهم في قاعة واحدة. لهؤلاء الذين يحملون الرؤية لتحويل الأفكار والاستثمارات إلى أثر عالمي، هذا هو أعظم وأروع تجمع في العالم. 250 مليار دولار من الصفقات عقدت في هذه المنصة منذ أن نشأت في أقل من عقد مضى. مضينا طريقا طويلا معا، وفي هذه السنة من المبادرة يجب أن نأخذ الأثر الذي نصنعه إلى المستوى التالي. إن قوة رأس المال التي يمثلها صانع القرار الحاضرين في هذه القاعة تأتي وتحمل في طياتها مسؤولية كبيرة وحتى فرصا أعظم لتشكيل مستقبل الاقتصاد العالمي. علينا أن نتصرف ونحن نضع نصب أعيننا هذه المسؤولية، وأن نتحين هذه الفرصة بلا تأخير. منذ أن التقينا لآخر مرة منذ 12 شهرا تغير العالم، وطموحات المستثمرين والشركات زادت وارتفعت وفقا للواقع الاقتصادي اليوم وموجة الإرباك التقني الحاصلة. والثورة التقنية الحاصلة، إن هذه النماذج الماضية لم تعد ملائمة لغرضها، والحكومات لا يمكنها أن تصحح هذا المسار وحدها، وبالمثل فالقطاع الخاص لا يمكنه أن يتحمل المضي وحده خارج هذا الطريق التقليدي. يجب أن نجتمع معا كحكومات وقطاع خاص كشركاء حقيقيين. نحتاج نموذجا جديدا، ونحتاج تعاونا دوليا لعهد جديد من الازدهار العالمي. ومبادرة مستقبل الاستثمار هي موطن حدوث كل ذلك، حيث يلتقي قادة العالم والمستثمرون وصانع السوق يجتمعون معا ليتعاونوا. يجب أن نقوم ونبذل الأفعال لإحداث التغيير في السوق، ولا يوجد تهديد أكبر من يواجه التقدم من أن يتخلف عن الركب ملايين الناس في عالم يتغير أسرع من ذي قبل. إن الناتج الإجمالي العالمي أكثر من 111 تريليون دولار، ويتوقع أن يصل أو أن ينمو ب 2.8% هذه السنة. إلا أن هذه السنة أولويات تقارير مبادرة مستقبل الاستثمار تظهر عالما به تناقض، ف66% من الناس يشعرون شعورا إيجابيا في حياتهم، لكن 37% فقط متفائلون بشأن العالم. 69% متوجسون أن شركتهم قد تفقد الوظائف للمنافسات الأجنبية. هذه الفجوة بين الأمل الشخصي والشك والريبة العالمي هو أمر مقلق. إن التقنية يمكنها أن تساعد في سد هذه الفجوة، ولكن فقط إذا كانت تعمل لصالح الجميع. 3 من كل 4 أشخاص قلقون بأن الذكاء الاصطناعي سيوسع الفجوة التعليمية بين المجتمعات التي لديها إمكانية وصول والمجتمعات الأخرى التي لا تتمتع بها. لا يمكننا أن نسمح بحدوث ذلك، فعلينا أن نجابه انعدام المساواة والتي أخرتنا لسنوات ولوقت طويل. لأن انعدام المساواة ليست مجرد فجوة اقتصادية، إلا أنها أيضا فشل يكبح جماح الإمكانات البشرية من تحقيق واقعها. في 2025 تقريبا 10% من سكان العالم وما يقدر ب 808 ملايين شخص، يتوقع أنهم سيعيشون في فقر مدقع. ولكنني متفائل وأؤمن بقوة أننا مع كل تحد تسنح لنا فرصة لإيجاد حل يفيد كل البشر. وأعلم أن القادة الجريئين في هذه القاعة يمكنهم أن يقودوا التغيير الذي نرجوه. انظروا حول القاعة، رؤساء الدول وقادة ورؤساء تنفيذيون وقادة أكبر الصناديق الاستثمارية في العالم وغيرهم الكثير. إن هذا هو احتياط العالم الاستراتيجي للازدهار. اليوم الحكومات والقطاع الخاص يعملون من خلال رأس المال العالمي لتحقيق الاستقرار والأمن والفرصة والتفاؤل. إن الحكومات لا بد أن تكون على قدر المسؤولية، ونحتاج حماية لانفتاح السوق وليس زيادة في التشريعات. وتحت قيادة صاحب السمو الملكي سمو ولي العهد، التحول الاقتصادي في المملكة العربية السعودية وضع مقارنة مرجعية عالمية جديدة للرؤية الوطنية، رؤية 2030 التي
in 2034. Here in Saudi Arabia, wealth is not measured in numbers, but in the prosperity of its people. In Riyadh this week, we have the opportunity to forge deals across borders that delivers impact and capture the true power of partnerships. Here at the FII, we continue to play our role. This 9th edition will conclude with a declaration uniting global leaders in our shared pursuit of progress for all. So we engage over the next 3 days. Remember this: we hold the keys to prosperity in our hands. Now we must use them to unlock new opportunities that can change the world for the benefit of humanity. Thank you all for coming.
Thank you, Your Excellency. And before we start our first opening board of Game Changer, let me share with you in a few minutes the main results of the FII Priority Compass, what His Excellency has just mentioned. It is available from now. You will have it on the app. You were able to download it from the QR code. And it's definitely something that you can have also on the FII Compass, AI Compass. So just few results. We conducted this survey worldwide with a great partner, Ipsos, which is one of the leading polls company in the world. 60,000 respondents in 32 countries, as you can see on this first slide, which is almost all the continents are represented, and 66% of the global population. So these are the results. For the 4th consecutive year, ladies and gentlemen, world leaders, cost of living is still a major issue for the citizen of the world. Cost of living. And then equal unemployment, poverty, and social equality. I think it's a call to action, as His Excellency has just mentioned. We need absolutely to fight to bring prosperity to all citizens of the world. As you can see, despite the fact that it's a major concern for our planet, for the citizen, for the day-to-day priorities, global warming is number 7. So crime and delinquency number 4 almost. Social protection system, education, then tax, then global warming, then immigration, then international tension. On the next slide, you will see how it is between the global north and the global south. So as you can see, not totally equal, but definitely cost of living is in all countries in the world the number 1 priority. Then you see a little difference between global north and global south. And definitely this notion of unemployment is a real issue, concern in the global south. International tension is for the first time in the top 10 of our priority report. This is something you will find in the report also, which is the difference between continents. As you can see, Africa, by far, unemployment number 1. While in Asia, it's more cost of living and poverty, social inequalities, where in Europe is by far cost of living, which explain so many social crises. And of course, in the MENA region, also cost of living, while in North America, same. But as you can see in North America, crime is becoming one of the top concerns. Oceania, as you can see, is the majority is about poverty. And last but not least, in South Africa, number 1 is poverty and social inequalities. This is an amazing indicator about what should we do, leaders, to really fix these issues and where we should put our priorities ourselves. Over the past 4 years, global citizens believe, you can see here what His Excellency has mentioned also, that if we think or not that we are headed in the right directions. Citizens are quite optimistic. They think they are in control of their lives, but they are not convinced that their country is going in the right direction, and more concerning that the world is going to the right direction. And this is why we see many crises happening in some countries. These are the difference between the global south and the global north. Year after year, you see the evolution and the gap increasing between the 2 continents. Last but not least, I think it's important to look at what are the threats, not only the priorities, that our humanity is facing. So when we ask the question, what are your top concerns for you and your family? Definitely number 1, having a secure job. Number 2, staying physically healthy. This is why during FI we have many sessions about healthy humanity, and we are launching a big initiative that we really hope you will be joining. And of course, covering everyday living costs, saving and planning for the future, good education for the children. Last but not least, we are in Saudi Arabia, and I will be extremely objective. Saudi Arabia was ranked as one, if not the number 1 country, almost in terms of people feeling good and being happy. 80% of the people consider that their own life is headed in the right direction. 89% that the country is heading in the right direction, which is really so different from the rest of the world. 60% feel the world is heading in the right direction. You see the optimism we have in the Kingdom of Saudi Arabia. Please, I think we deserve a round of applause here. 88% satisfied with personal safety and 87% happy with their life today. MashaAllah. Thank you so much. And please, you can download the report. Now, I think I am probably passing the baton to the next chapter before we turn again and we look at the central stage for the first board of Game Changers. Thank you.
Ladies and gentlemen, I'd like to thank His Excellency Yasser Al-Rumayyan for this opportunity, for bringing together this, the greatest gathering on earth. Thank you, sir, for that brilliant and urgent call to action and for your optimism. Can I get a big round of applause for His Excellency, ladies and gentlemen? Thank you. Also, one special round of applause for the leader that put together this, the greatest gathering on earth, the chairman of the executive committee and the acting CEO of FII Institute, Mr. Richard Atias. My name is Mariana Atencio. I am a journalist, global speaker, and author, and I am so honored to be your MC for day one of the 9th edition of FII. And we begin with our signature FII format, our board of Changemakers. The theme is Geoeconomics with the inimitable moderator, David Rubenstein. The floor is yours.
Okay. Okay. We have an all-star panel, and there is no way to do this properly without doing it alphabetically. So I can't decide who I should ask first questions, so I decided to do it alphabetically by last name, if that's okay. So why don't I start with Bill Ackman. Bill is the CEO of Pershing Square, and you've been very active on social media of late, I think it's fair to say. So does that help your business or hurt your business, and what's been the impact of being so active on social media?
I think it's very helpful. One, my principal driver in life has been independence. That's motivated me to be successful, and free speech has been a very important thing to me. So it's sort of aspirational for me to be able to speak so strongly about things I believe in. And then second, I think the things that I've talked about, my advocacy has been about everything from viewpoint diversity, against discrimination, against terrorism, in favor of capitalism. And, I think people who I partner with share those values, and if they don't, I probably would rather not partner with them.
All right, you've been particularly active recently in decrying the possibility that a particular candidate might be elected mayor of New York. Why do you care so much about that, and will New York fall apart if this candidate is elected?
New York's been very good to me and my family. Been New York City residents for over 100 years. And it's the most important financial capital in the world. And I think there are having a socialist mayor, I think, would be catastrophic for New York. While he's correct, as we saw from the survey, affordability is the #1 issue, actually, for many people in New York City. He's correct on the issue, but he's incorrect on the solution.
All right, so who's going to win the mayor election?
I actually think we have a shot of Cuomo winning the election, but we have to have everyone on this panel tell everyone who works for them to show up on election day or before. It's a critically important election for New York.
Okay, Christian Aman, you are the CEO of Qualcomm. Qualcomm did a spectacular job in the mobile telephony world and with its proprietary patents in terms of things that needed to be in cell phones. What are you doing to take advantage of the next wave in terms of artificial intelligence? And how are you repositioning Qualcomm to be a leader in artificial intelligence?
Yes, look, Qualcomm has been changing a lot, I think, for the past few years. I think what we realize is some of the technologies we have developed for the mobile industry, and given the scale of the mobile industry, they could be incredibly disruptive for other industries. And when you look at what's happened with AI, it's a new form of computing, it's a new form of software. This is going to change every single computer that we have. And that's not only what's happening on the data center, but also what's happening on phones, on personal computers, on cars, on industrial machines. We think that's an incredible disruptive technology that will change. It's going to be a big change for consumers. It's going to be a big change for some of the enterprise. I don't know yet how best to compare. I remember when I started my career, we have to go in and get memos from the fax machine and start writing new memos back. And then if you look at the combination of computing and internet, what has done for consumers and for the enterprise, I think that is the kind of change. And I think it's going to create an incredible opportunity of transformation in all of those industries.
So if somebody wanted to invest in what's going on in artificial intelligence, what kind of a company would you have them invest in other than Qualcomm?
Look, I think right now, I feel that if I go back to what happened in the beginning of the internet, like nobody really knew which company won the search, the social media, the map, what happened, for example, with all the different services, the SaaS business. I think we're a little bit about that in this stage in AI. We don't know yet who is going to be the winners, but I think this space is moving very fast. I will pay attention to the companies that are becoming really connected to the consumers. I think understanding human intentions is very important and valuable when now the computers understand what we see, what we say, what we write is a change in the human-computer interface. And companies that are embracing, I think, the new agentic type experiences for the enterprise. And I see a lot of companies make bold moves. I'm actually very proud of our partnership here in Saudi Arabia. I think the national AI company, Humane, is doing a lot in agent for enterprises. I think it shows the direction. And I think we have a bright future, and all of this is going to be happening within the next 12 to 24 months.
All right, Jamie Dimon is the CEO of JP Morgan. Jamie, recently you opened a new building in New York City that cost a fair bit of money. What was the reason to build your own building? Why not just rent buildings from other people?
Yeah. So first of all, I'm thrilled to be here, everybody. Thank you for having us. Congratulations on the enormous path to peace in the Middle East, which I think is the most important thing. You got to thank the Crown Prince and the President of the United States. And that dwarfs all other things, by the way. The building is not as important. We have to compete with you and Bill Ackman and Goldman Sachs. And it's a beautiful building. You know, we're giving our people beautiful trading floors and 15 places to eat. You know, a great entertainment space. We try to treat our people well. I used to make a joke that, you know, these people want Pilates, yoga, and wellness, and now we're giving them Pilates, yoga, and wellness. So it's a great place to work. Our people work very hard, and you know, wherever we are, we want them to feel good coming to work. And I also think in-person collaboration is so important for society, for life, for creativity, for cohesion. That, you know, we are back to work full time and
you've been a leader in saying that people should come back to work and work in offices. What is your thinking about why it's important to actually be in the office as opposed to doing it over Zoom?
Yeah, because you know, Zoom is a great tool, so I'm not making fun of Zoom, but you know, younger people being left behind, their social lives are deteriorating. They don't get ahead. But even all of us in management, when we meet on Hollywood squares, there's not as honest a conversation. You don't have that constant follow-up. People say, we'll pick it up next week when we get there. You know, Steve Jobs used to talk about the collaboration that's accidental because you run into someone in a hall and they come with an idea. And almost everyone probably in this room, if you look back at your careers, you learned a little bit from apprentice system. You were with other people who took you on a sales call or you know, told you how to handle a mistake or something like that. It doesn't happen when you're in a basement on Zoom. Right? And you don't get married on a basement in Zoom, and you don't meet people. So I think it's just very important to have a social life.
Okay. If the President of the United States asks you what the quality should be in the next Fed chairman, what would you tell the President of the United States?
We'll deal with whatever the reality is, okay?
Okay.
Yeah.
All right, and you're not interested?
No.
All right.
Oh, me? Absolutely dead. Are you kidding me? Over my dead body.
All right. George El Neri, who is the CEO of HSBC. So HSBC is a major bank in Europe, obviously, and in Asia as well. How have the European banks fared compared to the American banks since the Great Recession? Have they kind of slipped behind the American banks in terms of global leadership, or are they still very competitive?
Thank you, David, and very privileged to be here with everyone. First, we do have deep roots in large parts of the planet, certainly in Asia, certainly here in the Middle East. We have been born 160 years ago in Hong Kong, and about 10 years later, we were already established in San Francisco, and that's the kind of history we built around these areas, and we've been uninterrupted more than 70 years in the kingdom. it's very important to realize that now you build connectivity through trust, through relationships, through historic understanding of local needs and local cultures. And this is really what we try to position ourselves for. Notwithstanding, we have great partners and great competitors in my American peers here on the stage. And we will supplement each other to make sure that the world is fully served with financial services.
And how is your relations now with the government of China? You do a lot of business in China and Hong Kong. How is that? Is that more difficult than it used to be or easier than it used to be? Or both?
David, I want to say it's probably always been difficult to navigate some of the, national requirements, and more and more assets are becoming national assets. Code is becoming a national asset. Chips are becoming national assets. Cloud and data are becoming national assets. But if you understand what is national assets for many of these jurisdictions, there is an ocean of opportunity out there where connectivity and supply chains and consumers and trade flows can still happen and want to happen, and this is where we need to focus our attention.
Larry Fink is the founder and CEO of BlackRock, the world's largest money manager, I think it's fair to say. Larry, you see where money is flowing in and out of the world, probably more than anybody else. Where is it flowing in right now, and where is it flowing out?
Well, it's good to be here in the kingdom. Thank you, David. It's always wonderful to see the transformation of the kingdom. And again, coming back here again, we're seeing an enormous change. We just did a transaction here in the kingdom, and we had 5x more demand than we could provide. It was for a pipeline in Jafurah, and the amount of money that was interested in investing here in the kingdom was at a record level from places all throughout the world. We had 5 times more demand for investing in this one project. To me, this is just an indication of the transformation here in the kingdom, but more importantly in the whole region. And I do believe we're seeing more and more as the GCC becoming one of the major destinations for capital. This region has been typically underinvested by global investors worldwide. At the beginning of the year, we did see some modest transformation movement out of the dollar, and we saw that money moving into Europe and to other places. But that movement was from a huge overweight in dollar-based assets. And I would say in the last 2 months, we're seeing that money coming back into the United States. And so I don't see there's that much movement. There's still a deep belief in the opportunity in the U.S. You asked Cristiano about AI. If you look at the makeup of the second quarter of the U.S. economy, over 40% of the economic growth in the second quarter was CapEx for technology. And you don't see that in other places in the world. And it's that CapEx, whether it is through data centers or finding more power, gas, building gas turbines, you're seeing all that happening more in the United States than most places in the world today. You're not seeing that as much in Europe. And this is one of the big reasons for the huge gap between the U.S. GDP and the European GDP. But look, money's going to move around all the time, but I would say most global investors have a very large overweight in the U.S., and I think that's going to be the place to have your overweighting for at least the next 18 months. And we'll see how that all plays out then.
You talk to central bankers regularly. What are the biggest concerns today of central bankers about what's going on in the global economy?
I would say the biggest question from central banks is what is the role of tokenization and digitization? How quickly should they think about digitizing their own currency? What does that mean for the role of the dollar? If every currency digitizes and we have, what does that mean for bank payments? What does that mean for the payment companies like MasterCard and Visa? All these are being questioned right now. I think we spend so much time talking about AI. We're not spending enough time talking about how quickly we're going to tokenize every financial asset and the opportunity we're going to have a digital wallet and moving ETFs and other things through a digital wallet. And I think that's going to happen worldwide very rapidly. And I think most countries are ill-prepared for that and underappreciate how technology is changing that, not unlike how technology is changing AI and other things. It will be changing the technology around the plumbing of finance.
Okay. Patrice Motsepe is the founder and executive chair of African Rainbow Minerals, also the president of Africa Football. So, Patrice, why is gold more than doubling in price? And in the last year or so, gold is over $4,000 an ounce. Is it a good buy now, or is it now overvalued?
Well, let me start by thanking Yasser and Richard for doing an excellent job bringing the world together. Saudi is a reliable and a trustworthy partner, and thanks for the great work. We've got about 50,000 employees in our gold mines, and we've got investments in Australia and Papua New Guinea. Gold has always been a reliable source of wealth. We love the dollar, we love the euro, but during difficult times, the world, as has recently been reflected by the central banks, they fall back, and gold plays an important part. But as an entrepreneur, we have to diversify. So we're in 38 countries in Africa, and we invest in India, in Europe, in America. But for us, Africa is the most exciting place to be. Are there challenges in Africa? Yes. Will there be challenges? But it's an incredible place for us to invest and get competitive returns.
So about 1% of private equity dollars invested around the world are invested in Africa. Should it be a higher percentage, and why aren't people investing more in private equity dollars in Africa?
Over the last 20 to 30 years, we've tended to look at investments worldwide, and we underestimated the huge amount of capital in Africa. I mean, our businesses, family businesses, we've invested billions of dollars on the continent. We can invest in other parts of the world, but the challenge for Africa will continue to be, it has to be a globally competitive destination for investment. Investors, whether in London, New York, or any other part of the world, invest in the most competitive countries where investment is welcome, safe, competitive, and the returns are good. So I'm confident, I'm excited about the future of Africa, and we will continue investing in the continent.
Okay, Scott Nuttall is the co-CEO of KKR. Scott, people say that it's difficult to raise private equity dollars these days. Is that the case? And why do you think has been difficult? If it has been difficult, or it's not difficult, why do you think people think that it's difficult?
Well, I think people believe it's difficult because we're in a particular moment in the cycle. Now, let's separate. There's private equity, sometimes as a term is used broadly. So infrastructure, private credit, and real estate, not really feeling the impacts of what we're seeing in the PE cycle today. I think what's been happening over the course of the last 30 years, you've had a bit of cyclicality to fundraising. And so lessons have been learned in different points in the cycle. And so what's happening right now is you probably had parts of the industry that probably over-deployed in years like 2021 and maybe under-deployed in years like 2020. And so there's a bit of a dynamic right now where perhaps some assets were purchased for valuations a bit too high, and it's going to take a little bit longer to work out of that. So what you're reading about is monetizations are taking longer to come back to investors, which is impacting how some of them are deploying capital because they need that capital to come back. But I think you're seeing more dispersion right now. We had 10 years where everybody looked reasonably bright because rates were low, inflation was low, and multiples were expanding. Now we're going to see who's good at investing through a cycle.
All right, let's suppose I really don't know where to put my money, but I think KKR has a good brand. Where should I put my money in terms of private investments these days? What's a very attractive area over the next 5 years to invest if somebody wanted to invest with you?
Well, I think we look where are there capital supply-demand imbalances. And happily, that's taking place in a number of different parts of the capital markets around the world. Infrastructure, clearly significant need. Governments, if you look at developed economies around the world, debt to GDP went up by 10 percentage points on average since COVID. Okay. So more governments are looking to work with us on their balance sheet. I'm sure that's true for a number of people on the panel. That creates opportunities. There's not enough capital to be able to feed that. But we're also seeing opportunities to invest in different parts of the world across the private credit, across private equity, and real estate, the bottom's behind it, and is coming back.
Okay, Lubna Oleon is the chair of Oleon Holdings, among other things. Lubna, how has it changed in Saudi Arabia to do business here compared to 20 and 30 years ago?
Well, the change, first of all, thank you for chairing this and being the only Saudi on this roundtable. I have to say I'm very proud of the change that has happened in the country. I think what we see around this table is an indication of how attractive the market has become in Saudi Arabia. Earlier, we heard that 24 billion has 24% has been the growth of investment into the country. 34 billion has been invested from foreigners in the country. But it's all because of the tremendous change that has taken place. Ease of doing business, visas are easier to get. Lifestyle has improved tremendously. But one of our biggest changes has been the new investment law, which took effect this year. And this investment law gives foreign owners and Saudi owners equal footing in the countries. So in terms of access of capital, owning real estate, disposing of their investment, and repatriating the money. That's a tremendous change.
Okay. So let's suppose I wanted to invest in Saudi Arabia, and I didn't know that much about Saudi Arabia. What areas of Saudi Arabia would you recommend that I, as an investor, put my money in now?
Well, the country is booming. Real estate, selectively, is a very good area to invest in. Technology, we are in demand of great technology. So, I should go back to real estate. What I heard is data centers, and I think you are investing in data centers in the country, as well as healthcare. There's a great demand for quality healthcare, pharmaceuticals, and I have to say in renewable energy, as there is a great demand for increasing our output from renewable energy.
And is it easier being a woman investing in Saudi Arabia than it was 10, 20, or 30 years ago?
I've been doing business in Saudi Arabia for more than 40 years. It is more visible now, but I think it has been the same all along. There has been no discrimination between women and men from the beginning, I would have to say.
All right. Steve is the founder and CEO of Blackstone. Steve, you know Xi Jinping pretty well, and you know President Trump pretty well. What's going to happen when they get together? Are they going to come up with some solution that's going to improve the relations between China and the United States?
Well, David, thanks for asking that low-profile question. It's fun to be in the presence of a Major League Baseball owner asking those questions. I would say, without much hesitation, it's going to be a very positive outcome between the two countries. I think you've seen some preliminary views by the government of both countries that they've reached some kind of balanced relationship on the trade issues that have really been very visible and high profile and moved markets. I think that they've gone a long way to develop a much more functional relationship, which is good for the world. And I've been involved in some of those discussions. Both presidents want to sort of lower the temperature significantly in that area, and I think they're going to find their way to doing that.
Okay. So you invest all over the world and in many different categories. If somebody said to you, here's some money I have, I don't really know what to do with it, but I want you to take care of it, invest to get me a reasonable rate of return, what area would you recommend that somebody invest with you? In what area? In what country or what kind of sector to get a good return?
Well, people do ask us that question. Right now, the most interesting area is in the data center, AI complex, with particular emphasis on power. Power is what's going to be in short supply. If you look at a developed country like the United States, we're somewhere between probably 80%, 85% of all the investments are going, we have an electric grid that didn't grow for basically 20 years. And now with the advent of all these data centers, you're going to have growth of at least 4%, maybe 5% going forward. The reserve to protect adequacy of electricity in the United States is sort of mandated around 15%. So if you're growing at 4% a year and you only have 15% surplus, something not so good is going to happen very quickly. And that's already happening in a variety of areas in the United States. So the need to solve this problem is really acute. And for those of us who've been involved in this, at Blackstone, we're the largest developer of data centers in the world, largest owner of data centers. So we can see this all coming. And there just simply isn't enough money for the scale of this problem without very high returns going along with it.
Okay, so David Solomon. David is the CEO of Goldman Sachs. David, the IPO market and the M&A market seem to be coming back. What kept it from coming back for a while? And do you think it's going to come back as well in Europe as well as in the United States?
Well, first of all, thank you. I'm delighted to be here. I want to echo the thanks to His Excellency Yasser and Richard for the opportunity to be here again. There's no question M&A and IPO activity have been accelerating. I think they'll continue to accelerate in this environment. I think there are different reasons why there were headwinds over the course of the last handful of years with respect to both. With respect to M&A, confidence and also the regulatory environment weighs. And so I think with respect to M&A, no matter where you were operating in the world, if you wanted to do large, interesting, strategic things, one of the first questions was, can we? And no matter what the question was, the answer was generally no. We're now in an environment where the question is, can we? And the answer is generally maybe to potentially yes. And so that's leading CEOs to be much more strategically focused. I think scale continues to matter enormously. And so if you have an opportunity to create scale and relative position, and right now people feel that there's a regulatory environment that will permit it, we're seeing an incredible pickup in activity, and I think that'll carry through in 26 and into 27, unless there's something that slows that down. With respect to the IPO market and also financial sponsor activity, and Scott, alluded to this, 2020 and 2021 led to significant markups in private investments, and then 2022 led to a different valuation equation, and it's just taken time for us to grow into that. We've now come close to growing into that, and that's leading to an acceleration. I think the IPO market is wide open for companies that want to bring, good businesses priced appropriately, and I think you're going to see that continue to accelerate, although in the U.S., with the government closed, there are no IPOs, so until we get the government open, it's hard to see that. The pace of this activity in Europe, for example, is slower. And it's slower because of the regulatory burdens. It's slower because of some of the headwinds. 60 to 70% of all M&A activity, the target or the acquirer are US-based. And while IPO activity is definitely accelerating around the world, the US has deeply embedded advantages where more of the activity will be US-based.
Do you have any worry about a potential recession in the United States? Do you see any evidence of that anytime soon?
I mean, I always worry about, what can happen and what will happen. at the moment, I don't see a lot of compelling evidence for an economic slowdown in the near term. But the thing about economic slowdowns that I think is important for us to all remember is there's always a distribution where that's possible. Confidence can change very quickly. Exogenous events can change that confidence. At the moment, that doesn't seem obvious in the next 6 to 12 months. But I assure you, when we do get a slowdown or we get a change, it's going to be something that we don't see coming, when it actually shows up.
Okay. Lip Bhutan is the CEO of Intel. The President of the United States said that you should step down as the CEO because he said you had investments in China and didn't think that was appropriate for Intel CEO. Then you met with the President at the White House and you came away selling him 10% of your company. Whose idea was that, and was that an easy sell in the White House Oval Office?
First of all, thank you so much for an honor to be on this panel. And so clearly, being a good engineer, I tried to address the issue. So I set up an appointment to see him. And so have a chance for me to explain, I'm born in Singapore and educated in Singapore and then go to MIT and then study. And then 20, 30 years ago, everybody invested in China, so I did. But it's important to address the appearance of conflict. So I've been giving my carry interest to the charitable trust, and then so in a way address that. And then during the discussion, and I told him the first term I turned around Cadence Design, make almost 100 times return to the shareholder. And I said, second term, I like to make Intel great. And he said, how great can that be? And I told him the plan that I have to do it. And he said that we got to be a shareholders. And so I welcome him to be the shareholder. He said, next Friday, I want to announce I want to own 10%. And so he's delighted to have them as a shareholder, and it's an essential partner for us.
Is it easy having the United States government own 10% of your company, or is it hard?
No, I think it's good to have. And then if you look at TSMC, Charter Semiconductor, the government is a shareholder in their respective country, and it's an infrastructure, and it's very important for this whole resilience of the supply chain. And I think it's critical, and that's why I came back to turn around this company.
Intel used to be the leading United States semiconductor manufacturer and designer. It lost its way a bit. What do you think went wrong with Intel, and how are you trying to fix it?
Yeah, I think it's a tremendous success 20, 30 years ago, but I think complacement came into the picture, and then starting to have too many layers of management. So I decided to come in and clean up and then refocus the company to be an engineering-focused company. And tremendous opportunity in front of us. One is the AI, machine learning activity in terms of agentic AI and physical AI. And I think Intel can play a tremendous role in that. And then the other part is a foundry. And I think the world needs a reliable semiconductor foundry in U.S., and we have a footprint globally.
Okay.
Yes.
We're just about out of time, so I'd like to just ask any of you comment on this question. The United States government has roughly, I guess now, $38 trillion of debt, and we're adding about $2 trillion every year. Does that bother any of you that we have this much debt, or you think it's manageable because we've been managing it for the last 10 years or so? Anybody worried about the debt? You are?
Actually, I think we keep looking at the liability side of the balance sheet, and I think we also have to focus on the asset side of the balance sheet. And I think what the president is trying to do is massively increase the asset side of the balance sheet, including, among other things, I think is the investment in Intel is up 2x, 2.5x since the president made the investment. Look, I think it's very difficult to outrun $37 trillion of liabilities when the demands, it's very easy for a government elected for a relatively short period of time to make commitments. I do think the way we're going to get there is by growing the asset side of the balance sheet. And if you think about the government owns 21% of every corporation in America, and it can adjust the tax rate anytime it wants. It owns 35% of every American's income, and it can make an adjustment in that number anytime. So there are a lot of assets on the balance sheet of the U.S. government that don't appear that are significant. So I'm not worried about our solvency, although I would like to see a slower growth rate in our liabilities.
Yes, Larry?
So if we continue to grow at 2% a year, the deficits to a percent of GDP is going to overwhelm us. But if we could unlock private capital, unlock everybody in the room, we could grow at 3%. I mean, it's not much change, but if we grow at 3%, debt to GDP will fall. But that being said, we still are a nation that needs 30 to 35% of all of our treasury sales goes overseas. And to me, that is the biggest issue today. We're lucky that people would like to invest in US dollars, invest in the US economy. If that ever changed, it has a multiplier effect because the dependency on selling dollar-based assets to foreigners. We are one of the most unusual nation in doing that and having that type of dependency. In most other countries that have high debt to GDP, they have huge domestic savings. So it does not have that difficulty. So it's something that we just need to be aware of, but we could get out of this very easy, as what Bill said. We need to grow out of it. We need to unlock private capital. It is not about raising taxes or lowering taxes. It's about unlocking private capital. There's trillions of dollars of money sitting in money market funds, sitting in bank accounts. If we get more and more people to move that money from a savings account to an investment account, we'll be fine.
So it's not I would say it's not a crisis, but it's very important we deal with this issue. It's a global issue. You go around the world, deficits are too high, governments are spending money, a lot of that money is being spent for consumption, not for future growth. And I would just add, what really works is good policy. We need growth policies, deregulation is free. You travel around the world, and I was just in Argentina, and you look at the policies, what they've done in Saudi Arabia, with the markets, with PIF, with education, with schools. Good policy is free, and bad policy is devastating. So we should all focus on is education, healthcare, infrastructure, proper taxation, foreign investment, and it should be used to help all the citizens of a country. And we don't focus enough on that because bad policy sinks country after country after country.
The people who want to invest in the United States, should they be worried that the dollar is going down against, let's say, the European currency for the last about 11% or so since January? Or is that something that American people who invest in the United States should not be worried about? The dollar has declined in value. Is that a concern of any of you that the dollar has gone down in value, or not really?
It's a short window, David, and there's been dollar supremacy for a long time. You've given a little bit back, but at the end of the day, it goes back to this growth point. Where's the technology innovation and where's the growth? Technology innovation is central to growth. The United States has a very strong hand in that. Where's capital formation, the best capital markets in the world? The United States has the best hand in that. So while in the short term, there are reasons that some of the dollar dominance has moved back, when you talk to capital allocators broadly, and Larry made this point before, the vast majority of capital allocation, 50%, is going to come to dollars and dollar-based assets, given the economic position we have.
So a final question for anybody. Should I be buying cryptocurrencies or should I avoid it? Anybody think this is a great investment opportunity, or
if you believe that countries are going to continue to debase their currency, if you believe that there's going to be global rise of insecurity, owning crypto assets or gold are assets of fear. You own these assets because you're frightened of the debasement of your assets. You're worried about your financial security. You're worried about your physical security, and between crypto assets and gold, they believe there's a strong belief that is a good hedge against optimism.
Okay. Jamie, you were a little skeptical of crypto at one point. You're still skeptical.
I've gotten away with no damage so far. Crypto is real. If you mean blockchain, stable coins, you have a JP Morgan deposit coin, you can move stuff, smart contracts are real, all that stuff is real. It will be used by all of us to facilitate better transactions and customer service.
If anybody wants a tour of your new building, what's the best way to get it? Call you directly?
Call me directly, yeah.
Right. You're easy to get a hold of, right?
Yeah, you'll get in, David.
Okay. Thank you all very much. Appreciate it.
Thank you.
Thank you.
Thank you, David.
Thank you, guys.
You're a very good moderator.
Hey, good to see you. Thanks a lot. Thank you. Okay. Well, so crypto is okay, right? Right?
Big fan.
Okay, thanks. Good job. Thank you.
La mi vida. Voy. Ladies and gentlemen, if you could please take your seats and turn your attentions to this side of the plenary hall, because we are going to continue these very provocative and urgent conversations after that amazing board of changemakers. We have our first fireside chat, and it includes Her Excellency Dr. Ngozi Okonjo-Iweala, Director General of the World Trade Organization. And it is a conversation that will be moderated by Zanny Minton-Beddoes, Editor-in-Chief of The Economist. So please turn your attention to this side of the room so that we can have this very fascinating conversation. The topic of the fireside chat is the world headed from free to strategic trade? So some of the themes that were touched on with our board of changemakers moderated by David Rubenstein that these amazing trailblazing women are now going to discuss. We have Zanny waiting here in the wings, and yes, go ahead. Zanny Minton-Beddoes, a big round of applause for her, everybody, as she kicks off our first fireside chat.
Is my microphone working? Good morning, everybody. We are going to talk this morning about a topic that is in a fairly fragile state, which is that of global free trade. And so I'd like you to take part in a poll to set the stage for this. Shh. Could you answer this poll, please? The poll question is coming up right now. And the question is the impact of raising tariffs globally more positive than negative? So this is an intelligence test for you, because if you believe that tariffs are good, you should say yes. If you think that tariffs are bad, you should say no. Please vote, and we will discuss that later. And now I'd like to welcome, for a conversation, Dr. Ngozi Okonjo-Iweala. Come and join me, Dr. Ngozi. Dr. Ngozi, as you know, come on up. Come and join me. Have a seat here. If I could just get your attention. If you care about free trade, you should be listening to this conversation. And as your chairman this morning said, we need more open trade, not protectionism. So I suggest you listen to a conversation with a woman who is the global avatar for free trade. Dr. Ngozi, thank you for joining me.
Thank you, Zanny.
As you know, Dr. Ngozi is on her second term as Director General of the World Trade Organization. You wrote recently that the global trading system has been jolted in the past few months. I think that's a very English understatement. It's been quite severely jolted, and some would say that the World Trade Organization is on life support. How do you view the state of global trade?
Well, thank you, Zanny. Let me just say this, maybe jolted. I'm not British. I would rather say disrupted.
Disrupted,
yes.
Okay.
I think that the global trading system is suffering the most severe disruptions in 80 years. And so there's no doubt that it's been bruised, as I said. I always say it's battered, but it's not broken. And the reason is this: you don't have to take my word for it. Just look at the analysis. The analysis shows that in spite of what has happened, and the unilateral actions of the US, 72% of world trade is still going on WTO most favored nation terms. So yes, most people think global trade has been severely disrupted, which it has, but it is still, the fact that almost 3/4 of world goods trade is still going on WTO terms is amazing. It's come down from 80% pre-tariff to 72%. So yes, there's been an impact.
I think that is something that is worth dwelling on. Shh. Could I ask you to please keep your voices down? I think it is important that you can hear what Dr. Ngozi has to say. Shh. Shh. Thank you. Dr. Ngozi has just pointed out that over 80% of global trade is still under WTO rules.
No, 72%. It was 80% pre-tariffs.
So that is, you know, the United States is the world's biggest economy, but it is not actually such a big part of global trade. So that begs an important question, because the US has essentially said, we're not respecting global trade rules. Does that mean the rest of the world, if it would like to do what fight against protectionism, should go with the WTO, or should we think of free trade through regional trade deals?
Well, first, the US has taken unilateral actions because it has a set of criticisms against the system and feels the system has not changed or evolved in the way it would have liked it to. And it's made some of those criticisms about unfair trading practices, about not level playing field in the world trading system. It's not the only one, by the way. Developing countries have also said that the world trading system is not working for them as well as they would like. And whilst you may not agree with the US's unilateral actions, I agree with a lot of their criticisms that we need to reform the system. But we don't need to speculate, because data shows what I'm telling you, that 72% of world trade is going on WTO terms, because other members have not done a tit-for-tat retaliation with the United States, which is good. We don't want to go to what happened in the 1930s with the Smoot-Hawley Act and tit-for-tat. So I want to give all thanks and congratulations to WTO members, because they are trading among themselves, they are respecting the rules, so they are not going the way of moving away. Look, let me say that the 72% may yet come down. I'm not saying that, if there are further unilateral actions anywhere else, it might come down. But it's amazing that the system is so resilient.
It is. It is true that I think if 6 months ago we had spoken, I would have worried about a much bigger hit to the global trading system. I would have worried about a decline into 1930s style retaliation. And we haven't had that, because many countries, and in this region in particular, countries want freer trade. They do not want protectionism. But
can I say something, Zani? I have 166 members, okay? The United States trade to GDP ratio is 25%. So, it can live, it has a large economy, domestic demand is great, can live without trade. 142 of my 166 members have trade to GDP ratios north of 50%. So trade is existential for them.
But can you have a successful global trading system without the world's biggest economy actively taking part?
I think the US is actively taking part. The US is at the WTO, is still a member. It engages at the WTO, and I think what we need to work with the US on the reforms. And I think, look, this is where I see opportunity in this crisis, in global trade. So whilst we're sitting here, I think we shouldn't all be doom and gloom. There are parts of trade that are really growing. Services trade is growing at twice the rate, at about 4.3%. Goods trade is growing at 2.4% this year. Digitally delivered services trade is growing at 8%. So So all of that green trade is almost 2 trillion. And I'm quite excited about that. What I think is we should listen to the criticisms, we should reform the system so we can take advantage of these new opportunities. And that's what we're working on at the WTO.
You raised a really important point. The WTO was created, in a sense, for a different world. It was a 20th century organization, and we are in a very dramatically changing world economy. Digital, services, AI. So what are the trade rules that we should all be pushing for to create an open system for the 21st century?
Well, I think we are working on rules for e-commerce, you know, for digital trade. I think we should be paying attention for that. And a group of our members, almost 100 of them, you know, at the WTO, you can make plurilateral rules by a group of a willing coalition of members coming together, as well as multilateral, everybody involved. A plurilateral with almost 100 members looking at rules for digital trade is ongoing right now. And I think that's where we need to be focusing our attention. How are we preparing to take advantage of the opportunities that are coming up in trade?
So that's a really important point, that you need more agreements which are, as you say, plurilateral, coalitions of the willing, countries that want to have freer trade move together. Which areas are you most optimistic about having those significantly in the future?
Well, I think, as I said, coalitions of the willing that come together to look at digital trade, maybe green trade, which is growing. I just want to tell you something on AI. You know, we really need to be up to snuff. We've just done a study on AI. Do you know that the first half of this year, trade grew at about almost 5%. That's why we're projecting 2.4 for the entire year. But guess what was driving that trade? Trade in products relevant to AI. Of course. You know, 42% of the growth in trade in the first half of this year was driven by AI goods. So if we don't sit up and devise the rules that can make AI trade continue to grow the way it is, then we're losing time.
But what do you mean by that? Because AI is clearly, will be discussed hugely at this conference. It's the technology of our time. It's also a technology where there is a race. There is a race between the United States and China. And there is a concern, as you've written actually in articles, about developing countries falling behind. Given all of that, what are the rules you would want for trade in AI?
Well, let me say the good news is we already have an agreement that actually makes trade in AI flow. It's called the Information Technology Agreement, and it covers $3 trillion worth of trade in the semiconductors and computer equipment and all the things you need for AI. So that is good news. We're also, as I said, negotiating e-commerce. So we need to look at standards. We believe AI, one, will reduce the cost of trade, but will also change the nature of the goods we trade. And for that, you have to look at standards. And this is something that the WTO is very good at. And you know, so we need to focus our attention on how do we think about standards in goods that are AI infused or services that are AI infused.
You know, I hear you say that, and of course I agree. But then I think, where is the world's attention going to be? The world's attention is going to be on the meeting between President Trump and President Xi Jinping, because they are the two big economies that will set the rules. And I worry that you are pushing for useful things, but they are not where the center of the action is as regards global trading relationships.
Absolutely, I disagree with that completely, Zani. I mean, if we were not where the center of attention is, I don't think that China and the US will still be part of us at the WTO. They'll move. They don't need to be there. China's trade to GDP ratio is also less than 30%. But they're there, and you need to ask yourself why. So yes, it's also good to talk about AI and all that, but there's some parts of trade that are the plumbing of movement of goods and services in the world economy. And I think these two countries know it. China knows it, and the USA know it. But, you know, I always joke that the WTO and its rules and agreements are like the plumbing in your house. You ignore it until the pipe breaks and floods the room.
That is a metaphor I don't want to think about too much.
Well, just think about it. You don't think about the plumbing in your house until the pipe breaks and your nice Persian rug is flooded and ruined. That's the way. WTO has fundamental rules like customs valuation agreement, intellectual property agreement. What I love about this place now is business people are in here. They are the ones that trade. You and I don't trade. So they know what matters to them. And so China, business people in China and business people in the United States, they are our support at the WTO.
We do trade. I sell a product across borders, absolutely. Let's find out whether this audience believes that the global tariffs were a good or bad idea. Let's get the results of the poll, which I believe are ready. So they've come up. 20% of you think, oh, phew. Oh, luckily, they're all free traders here. That means 20% think the tariffs are a good idea. 80% of you think they're not. So we're starting, this is a friendly crowd.
It's because they're business people.
Absolutely.
You know, that's why I love being here. You know, they know what actually happens in trade. So they know what is good and what's not.
We just have 1 minute left. Given that you have a friendly business crowd here, and this is an action-focused event, things happen after this event. What is your wish list? What do you want these business people to go back and do and tell their governments needs to happen? If you could wave a wand, what do you need to strengthen global trade going forward?
I'll say two things to them. One, some optimism is warranted. Things are not broken the way people think. You know, just take away this number, 72% of global trade going on WTO terms. Two, but we need to reform the system. We cannot be complacent. So what I want you to do is to get your governments to support the reform at the WTO. We need to reform some of the ways we do business, like our consensus decision-making system, which is practiced as unanimity. Everyone has to agree, so it really slows down decision-making. We need to improve our transparency practices. For instance, we need to talk about the use of subsidies, whether they are new green subsidies or existing industrial subsidies. Industrial policy is back, so we need to talk about that. So there are lots of things we need to reform at the WTO. I want them to first bring their ideas for the reform. Some of them have been doing that. We just received the Kendaren from Japan, and they brought specific things they want to see in the reform. Bring your reform ideas and get your ministers of trade to have the political will to push for the reform March 2026 at the WTO Ministerial in Yaoundé. Thank you.
Bring your reform ideas, and the WTO is alive and kicking. Dr. Ngozi Okonjo-Iweala, thank you very much.
Thank you, Zan.
Okay, Mohammed is the, just one at a time. Okay.
Applause. Big round of applause for Sandy Minton Beddoes and for Dr. Ngozi. Can we hear that applause, please, ladies and gentlemen? Okay, I'm gonna organize this auditorium a little bit. Everybody who wants to network, who is all the way over there, please head to the Grand Cafe. We wanna keep plenary for these important discussions. We have incredible speakers, subject matter experts that have come from all corners of the world to be here and share their knowledge. So let's respect that. And if you are around this area and you want to listen in on the conversations, I would invite you to please come sit down. We want to fill the seats in the front row. All right, how about that conversation with Dr. Ngozi? I loved hearing about what the WTO is doing. I especially loved hearing what she said about China's in the WTO. The United States is still in the WTO. Yes, we can have the conversations about AI and all of that, but we still need the plumbing, ladies and gentlemen. And I thought that that was critically important. From our board of Changemakers, we also heard about crypto, we heard about Bitcoin, we heard about the money that is flowing in, where it's coming from, about the concerns of the debt in the United States. Then we had that amazing address by His Excellency Yasser Al-Rumayyan talking about the urgency of the moment that we're going through here on planet Earth. And we also heard, of course, from Richard Atias, chairman of the FII Institute, on the concerns of citizens all over the world, being, of course, affordability and poverty amongst the most important concerns, both in the North as well as on the global South. As you can see, we are very keen on data this year here at FII, collecting that data, especially from you, which is why we're asking to participate in our polls. So we went ahead and we asked global citizens the following question: are we headed in the right direction? Let's watch this video. Turn your attentions to the screen.
Perfectly positioned. All right, ladies and gentlemen, if you'd like to take your seats for our next panel. The Board of Changemakers, Public-Private Power Brokers. I'm Becky Anderson, the Managing Editor for CNN in the Gulf region and host of Connect the World with Becky Anderson, which is a news program, a nightly news show broadcast from this region, from my home base of Abu Dhabi. Welcome to FII 9 and to the back end of 2025, a year when geopolitics feels like a season finale. Alliances are shifting, trade routes being reimagined, and everyone, it seems, is trying to debug a global supply chain that feels increasingly weaponized. In the face of all of that, we have seen unprecedented alignment between national strategies and private sector resources. And at the center of all of it are the public-private power brokers, the sovereign wealth chiefs, the ministers, the CEOs, the infrastructure investors and the regulators and their whisperers, of course, the people who move capital, cajole policy, decide which projects get built, which technologies scale, and which regulations get politely relabeled innovation-friendly. They operate where geopolitics, the how and the who of power, meets geoeconomics, the art of turning markets into leverage, and they do it at times with the kind of pragmatism that makes the rest of us nod in uneasy agreements. I'm delighted to be joined by some of the world's most effective power breakers today here on this board. to discuss how to keep this fragmented world that we've heard some discussion of this morning from fragmenting further. Now, this is no uneasy task. We have less than an hour, but let's give it a go. I'm delighted to have you all here with me today. Your Excellency, Ministry of Investment of Saudi Arabia, Khalid bin Abdulaziz Al-Falih, it's good to have you, and I thought we'd start with you. Earlier this week, you described the tectonic shifts in geopolitics, in global trade, in technology, supply chains, and the rest, converging to, as you described it, reshape how companies and countries think and operate, how they compete and create value for stakeholders. So, against that backdrop, can you briefly give us a progress report on Vision 2030? What do you see as the Kingdom's competitive edge in 2025? And give us some proof points on these very strategic public-private partnerships that we see underpinning the transformation here.
Becky, thank you very much for doing this again. Good to have you back, and glad to be with this esteemed panel. And as I look at them, each one of them working with us is a manifestation of public-private partnership, both at scale and in terms of quality, underpinned, of course, by long-term relationships of trust and mutual confidence. First question on Vision 2030, the transformation, the extensive pivot that His Royal Highness the Crown Prince launched 10 years ago, when many people, including my friends around this table, thought we're dreaming. This is not a vision, this is a dream. And here we are today. I'll give you some numbers, which I think speak volumes. Our GDP has doubled. Everybody thought that Saudi Arabia rises and falls with oil prices, and they were right. For many decades before that, our eyes were fixated every morning on the oil price to see if we're going to be able to make our finances or have surplus which we can export for investment and saving abroad. Fast forward 10 years, GDP doubled, mostly driven by non-oil economy of Saudi Arabia. Global FDI has been declining. Last year, declined 11%. Our FDI over the same period quadrupled, and our aggressive targets are being exceeded. Total investment, which is driven not just by FDI, but by domestic, doubled. And we're number 5. We've reached 30% investment in our GDP, and mostly, again, non-oil GDP. Of the FDI, by the way, 90% of the FDI coming into the kingdom is non-oil. Maybe the 10% is Total and Patrick, but the kingdom is humming, and the transformation is indeed being driven by new sectors, exciting sectors. Most of the investments in Saudi Arabia are in sectors like advanced manufacturing, tech, tourism, entrepreneurship, and deep tech VC have gone up by a factor of 10. We've already this year exceeded the threshold of $1 billion deployed in our startup system. We're about 60% of the Middle East. Our non-government spending, we were really dependent on oil, as I mentioned. Today, 40% of our budget expenditures are funded by non-oil revenue. So we've achieved a significant decoupling in terms at the macro level, fiscal. I would say this is the quantitative numeric. I think what's most important to us and to our partners are the qualitative elements in Saudi Arabia. Our unemployment has been halved. Our women participation in the workforce has doubled. We used to have about 500,000 Saudis only in the private sector. Most Saudis were employed by the government. We have multiplied that by a factor of 5. And it's voluntary. The private sector is taking them on. This is not forced employment by Saudi. Our competitive edge, I think, is multifaceted, but most of it, I think, or a lot of it has to do, again, with the vision. The clear, long-term vision of the government, His Royal Highness in particular, not just Vision 2030, but people can predict where the kingdom is going to be in 2040 and 20. Our North Star is clear and it doesn't oscillate with the weather or with what's happening. The tectonic shifts you talked about doesn't change what we're doing. Political tensions don't change where we're going on the economy. Our regulations are excellent and improving by the day. We've brought in a lot of new regulations. Our geographic position, we believe, is a huge competitive advantage. Human resources is a powerful strength for the kingdom. As I mentioned, our fiscal, monetary, currency peg, substantial reserves and buffer that the country have. We can withstand any shock, and we've withstood multiple shocks, COVID, multiple oil downturns, regional tensions, and the kingdom keeps chugging along. Non-oil is growing between 4 and 5%, no matter what happens outside. And then we have our deep pockets. We have the PIF, we have the NDF, we have a strong banking system that provides credit and liquidity to investors. So these are just some of competitive edges. And it happens at a time, as you mentioned in your introduction, where the rest of the world is actually, unfortunately, we don't prey on this, but the rest of the world is experiencing a lot of uncertainty. And in Saudi Arabia, there is certainty.
That's a great start for this panel. Before I move on, I do just want to ask you very briefly, and for the benefit of this audience, whilst those proof points are really very impressive, what there is a lot of noise and reporting about a change in priorities, a spend that is being reallocated or refocused. Can you just speak to the 2025 sort of focus and the strategy for the next 5 years, second half of this vision? Because and you'll also say, you know, Saudi doesn't stop at 2030, of course. You know, that was a sort of goal and a vision. And what that pivot perhaps or refocus means for this sort of alliance economy that we want to discuss today, these public-private partnerships, which are so strategically important to the kingdom.
I think the last couple of years, I mean, it's not specific to 25, but the last couple of years, we've seen the opportunity, and it's addition rather than subtraction, of some huge opportunities that are emerging. The most obvious one is AI and the acceleration of digital and what we used to call the fourth industrial revolution. The ability not just to build the world's most efficient, lowest cost, connected data hub for AI here in the kingdom, but all of the applications that come with it and the disruptions in a positive way that the kingdom can lead in, not just catch up with. So this required some allocation of resources, capital, human resources. His Royal Highness has directed for the creation of a national champion, but other private sector investors in the kingdom are also adding their own resources for the kingdom to be that global hub. And it's not just about accessing the most reliable, least carbon-based energy and electricity for decades to come that the tech world can rely on, but also our commitment to employing it in our manufacturing, in our logistics, in our human resource development, in healthcare, in biotech, in disease treatment and therapy discoveries. So all of this is happening. As we speak here, and we think this is a big conference, 7,000 people, There is over 100,000 people outside Riyadh in a conference for global investing, global health that is taking place. And you mentioned Fortune 500 a few days ago. So the kingdom is architecting where the world is going. Supply chains, we have launched a program called Green Shoring again, capitalizing on our strengths, and we're putting resources, we're building industrial cities, we're creating special economic zones. In the meantime, if you think of the giga projects that were taking a lot of resources from the government, the Riyadh Gate, you can see the construction and the cranes. And tens of hotels are getting ready to start. And the Riyadh Gate Qiddiya is going to operation very soon. So the focus on those, catalytic nucleus of development. And in NEOM, of course, we have the green hydrogen getting ready to start. Oxygon is, and Sindala has many of its resorts ready to open. So we obviously need to let those assets go to market and see how they operate. And I think importantly, I will end with this. This is the time now to say to the private sector, you've seen us do what we promised. You've seen us exceed our targets. So public-private, it is time for us to maybe scale back on this government or PIF spend to prove and to seed some of these value chains and clusters and let the private sector come in and start investing. And this is what we're doing day in and day out at the Ministry of Investment, at the PIF, and across the government.
Thank you, Excellency. And I know my esteemed panelists will welcome that first sort of table-laying opportunity by you with an overlay of where we are at in Saudi and where we are headed. Dina, let me bring you in. You were here back in 2017, 9 years ago, putting together the first trip for what was then Donald Trump's first administration. His first trip outside of the country was to here. And you are deeply involved these days as a board member of Meta and of ExxonMobil in looking at what this sort of US-Saudi alliance economy, if you will, looks like. Just reflect on what you've just heard, where you see the kingdom having come in those 9 years, and the risks and rewards that you see of this alliance economy, these strategic partnerships, as it were, between public and private sector.
Sure. Well, thank you so much, Becky. I'm so honored to be here and to share a stage with so many friends and distinguished leaders, and my dear friend, His Excellency Khalid Al-Falih, who was indeed our partner when President Trump and King Salman and His Royal Highness, the Crown Prince, really envisioned something that probably they did think we were all dreaming could happen. When we convened here in Riyadh 9 years ago, under their auspices, where 54 Arab and Muslim leaders came to the summit. Enormous amounts of dollars were announced and invested and have gone on to make such impact economically. But I think if you had told us then that 9 years later you would have seen the economic, social, and political gains and transformation that we have seen, it would have been hard to believe. Economically, as His Excellency said, it would have been hard to imagine that this kingdom and this region of the world is now the dominant source of capital for innovation, the dominant source of capital for the change that we're witnessing in every industry: artificial intelligence, biotech, robotics, longevity. It used to be you would think about one industry when you thought about this region of the world. No more. This is the fuel. This is the capital of a different kind that is doing that. The second is socially, and I do want to say 65% of the population of the Gulf countries, of Egypt and Jordan, are under the age of 35 years old. So the social change that has allowed more women in the workforce, that has allowed more incredible female entrepreneurs to build their own businesses, and that has allowed young people to have huge vision for what they can do as the founders of the coolest companies coming from the region has really been tremendous. But I think what has been the most historic is the political reform that we have seen, both from all of the openings here in the kingdom and other countries, but the Abraham Accords, the first set of peace accords between Israel and countries in this region in 50 years. The last two had been Egypt and Jordan. I think we are moving too fast sometimes and don't pause on how critical it is that even after October 7th, not one of the signatories of that peace treaty got out. And I believe, thanks to President Trump, thanks to Jared Kushner, thanks to Steve Witkoff, the reason that we saw the ceasefire happen, the release of the hostages, and inshallah, God willing, a more stable Gaza so the humanitarian suffering can end, I think it's because in many ways the seeds were planted. To have last week that announcement not just be by the United States, but over 50 countries again, from Egypt and Jordan, the Emiratis, the Qataris, the Turks, the Pakistanis. This is remarkable, Becky, and you've covered each of these countries for so long, but as a coalition now to bring at least a immediate peace, hopefully, God willing, a stable peace, is really remarkable. And I think those seeds were planted many, many years ago, now almost 10 years ago.
Thank you. I want to drill down on what some of these strategic public-private partnerships should look like. Adebayo, you are a founding partner, chairman, and CEO of Global Infrastructure Partners. The recent landmark $11 billion lease-back deal between Saudi Aramco and your firm, I think represents a significant step in Saudi's energy infrastructure development, and it illustrates to a degree how global private capital is being harnessed for national strategic projects. Can you just speak to the structure briefly of the partnership and the strategic rationale? And we're going to keep our answers, if possible, as tight as possible, so we can get round to everybody at least twice.
Thanks, Becky. It really was indeed a landmark transaction. And what was fascinating about it was, you know, $11 billion of capital was brought into the kingdom, which is, I think, a third of the FDI that came in the kingdom. But we actually got into trouble with a number of our investors because it was 5 times oversubscribed. So I took calls from lots of our partners who were yelling at us and saying, well, I wanted 500 million and you only gave me 100 million. I wanted $1 billion and you only gave me 200 million. And you know, there were institutions from Asia, institutions from the US who had never done anything in the kingdom, who finally found this as a good opportunity. So I think it is a good sign of what the minister was talking about, which is the kingdom and the GCC as a whole has actually become a source of capital. And so I think that's very exciting. And the ability to marry public and private partnerships in a collaborative venture that serves the needs of Aramco, which is raising capital to finance the construction of the Jafra field, but also provide attractive returns for investors, I thought was excellent. And I think it is one of many, many other things that are going to happen in the region.
Patrick and Jim, both keenly focused on the energy industries. So to both of you, and let me start with you, Patrick. I mean, you've been deeply involved in public-private partnerships for years now with governments and NOCs. Can you speak to how these partnerships succeed at scale? And how you move beyond sort of narrow national interests and create genuine shared value? We've just heard about one model, one sort of strategic partnership. What are your thoughts?
You know, it's in our business, in energy, in oil and gas, fundamentally, we are at the core of public and private partnership. You know, the countries own the resources and we are trying to bring value to the resources. In the specific case of Saudi Arabia, the kingdom owns the upstream assets, and we are there to bring more value on it. And we have embarked into very large, in fact, ventures like our friends of Dow on our side, which was first to build giant refining capacities, $10–11 billion between Aramco and Total. and Total by that time. Today we are called Total Energies. I will come back on it. And secondly, recently we have added a huge petrochemical value park, another 11 plus $4 billion of investments. And again, all that is possible because I think fundamentally we understand what are the national objectives, I would say, of the kingdom. You know? And these projects are really fitting well with the idea to bring more value to the oil and gas resource, but also to attract value chain. And this is the whole idea of the value park, to attract more investments in order to be able, I know that His Excellency Al-Falih, I know him for a long, as a dream that one day we can build cars in the kingdom, but to build cars we need to have all the value chain, the chemicals to make tires, and the tires to make, and all these elements together. So I think this is really, if we understand what is the objective, then we can make the right investment. I think my main message today, you speak about pragmatic world, geopolitical, etc. For me, it's my instruction to all my teams in the world is we have to be more local, you know. We have to understand deeply what are the requirements and to even deepen these local partnerships. This is what we have done in the kingdom, by the way. The energy transition is offering us as well another opportunity to bring value to the Vision 2030. As yesterday, we have announced a new investment in a solar plant. I was very happy to listen to Steve Schwarzman in the previous panel who said that people should invest in electricity and power. This is what I'm doing. So, by the way, if you want to invest in a good company in the room, buy the shares of Total Energies. It's oil and gas in Saudi Arabia and electricity as well. So it's a perfect model for the future. Yes, we need to invest more. The energy transition will go for electricity, and the kingdom has this vision. And so, for me, this is really fitting within our strategy with what the country wants. And then, I can tell you, the support of the authorities is very important. Yeah. And we have built these projects thanks to the support, and I can only thank them, His Excellency Al-Falih, His Excellency Prince Abdulaziz, for all their support to these projects.
Thank you. Jim, you're not here to flog your shares, but I mean, if you want to, that's absolutely fine.
No,
but just pick up on this idea. I mean, the energy transition is going to take, you know, north of $1 trillion. The investment needed in AI data center infrastructure is humongous. So how do these partnerships, which are, you know, this alignment is critical at this stage, how do they best work?
You can't break our industry away from the energy industry because we use it as a feedstock. We also use it to transform materials. And so we're tightly linked. And obviously being able to generate that amount of power and do it at a low cost and do it in a sustainable fashion. And I think our industry for decades has been on a track of reducing its emissions and its environmental footprint, but also being able to bring the next generation of innovations out here and do it at scale. So the scale that we built here in the kingdom was unprecedented at the time, $20 billion in one go for a world-leading petrochemical complex. And this is one of the things that the data transition and the energy transition and the data growth needs, is how do we do this at scale? The utilities themselves won't be able to keep up with these needs. The reliability needs of the hyperscalers and the data providers are 24/7 uninterrupted power, baseload power, and that's exactly what we need as an industry. And so as an industry for years, we built that capacity ourselves, and most people don't realize that, but Dow's a 10 gigawatt generator of power and steam, and we buy and sell 2 gigawatts. So right now, some interesting partnerships are developing. We're working in the United States on a public-private partnership with X Energy, our partner, to really bring small modular nuclear to the forefront. Small modular nuclear that can provide a small footprint and a manageable capital size, but also safe, new technology, new fuel technology that's safer, it's reliable, it's baseload power. We can do it at the same cost, we believe, as combined cycle gas with some form of CO2 abatement. So if you can do that and bring that in the short term, natural gas will have to provide this power, but in the long term, nuclear will be part of that mix.
And as somebody that's been in the industry for a long time, to see nuclear, which is the most logical high-density footprint for energy, together with natural gas, finally be back again on the radar screen is the most positive thing that we have in front of us. But it's also demanding. It requires partnerships, and it requires companies that have engineering skill and knowledge and capability to build big projects to help get these first commercial scale units up so that we can replicate them.
Aliko, Dangote is one of Africa's largest conglomerates, invested heavily over the years in a number of big projects across sort of power, infrastructure. When you listen to Jim describing where his thinking is at, I just wonder, can you just give us a sort of sense of your experience in investing in Africa and what you need from governments? You're coming at this perhaps from a point that says, Africa needs investment to combat poverty in the first instance. So just what's your perspective?
Well, thank you very much. I want to thank the organizers of this event, for inviting me, and also thank His Excellency, Khalid bin Al-Falih, because we met in Senegal. And he said that make sure you come, so and that's why I'm here. Well, thank you very much. Well, in Africa, really, what we are doing, we have a lot of raw materials, of which we need to be converting our raw materials to finished goods. And I think it's one of the reasons why we are leading in the industrialization of Africa. It's not really about making money, it's about industrializing our continent and make sure that, yes, we invite other people to come and invest, because without us investing, there's no way we can convince anybody to come to our continent to invest. So of recent years, you're talking about partnership, for example, with governments. When we decided to build the largest refinery in the world, which is 650,000 barrels per day, the government also bought in some shares to encourage us. And we are really very thankful to the President of Nigeria, President Bola Ahmed Tinubu, for making sure that, yes, he encouraged us. In fact, apart from what we have right now, just last week, we said that we want to make history. We want to build the largest refinery in the world, which we have just announced to make it 1.4 million barrels per day. The issues about investing in Africa, not only Africa, is to do with everywhere, is to do with consistency in government policies. What we have had before in Africa has actually been a major challenge, where anytime when there's a change of government or change of minister in a certain ministry, the entire policies change. And it's like you playing football. When you're about to score a goal, somebody will tell you that the goalpost is behind your back. So by the time that you turn, you'll be late. So I think right now we have major consistencies in terms of policies in some, countries. Of recent areas where we thought we even go and invest. Ethiopia, of recent, we just launched a 3 million tons of urea, the first in East Africa, and we're going to start the project beginning next year, and we'll finish within the 3 years. But what did the government did? What they said, okay, to encourage you, we'll buy 40% of the company. They invested 40%, and they guaranteed takeoff of the entire 3 million tons of urea. I mean, that's really what you call partnership. So we have this partnership which is costing us about $2.5 billion, dollars. And we're looking for more African countries to partner with, to go through this trajectory, because we need to really create jobs. I mean, I heard of some of the Middle Eastern, GCC countries, the population, where they say 65% is below 35 years of age. In our part of the world, it's actually 75%.
Wow.
Yeah, 75% is actually below the age of 35.
Yeah.
So that's the kind of situation we have.
Rania, you're Minister of Planning, Economic Development and International Cooperation for Egypt. And you just listened to what Aliko has said here and some of the thoughts from our board here. I just wonder whether you can firstly give us your sense of, where you see this sort of, loosely termed alliance economy as sort of, going at this point. But very specifically, I want you to speak to the role of government as an enabler, the importance of setting clear rules and policies and ensuring transparency and predictability. I mean, Egypt has made significant progress in establishing and promoting public-private partnerships across various sectors, including infrastructure projects and healthcare and the energy sector. But these are not without their challenges, are they?
Well, first, thank you very much for the invitation, Minister Falih, and congratulations for the 9th FII. I think I only missed one during the whole years. A few things. When we saw the outcomes of the FII Compass, I think two things are very striking. Number one, cost of living for people, and number two, jobs. The only way that any country will be able to move ahead on these is through alignments. And alignments here are very important in the sense that they create the resilience that countries need in order to face shocks. Today we have shocks related to supply chains, climate, energy. So governments can't do it alone. The private sector needs to see that risks are manageable. And that is only possible if we have aligned incentives from both sides. So alignment is extremely important. It's not just the words. Under it comes many pillars of action. Some of those definitely include clarity with respect to rules, commitment when it comes to what is it that we want the private sector to invest in, and as was mentioned, to alleviate the problems and the bottlenecks that come along. The other issue which is important is the clarity with respect to policies. And when we say alignments, I just want to give, when we're talking about regional cooperation, and with Saudi Arabia, for instance, we have connectivity on electricity. There's a consortium related to governance. So this is an example of alignment. In the case of Egypt, growth, jobs, and resilience are key to us. We've put together an economic narrative for development, and it includes all the reforms related to that. You mentioned infrastructure. Without infrastructure that was invested in over the past years, be it logistics, ports, the grid, etc., we would not be able today to have very big companies in the renewable energy working in Egypt, Aqua Power, just to give an example, and many others. You mentioned transparency and trust. Transparency and trust, we need to create a balance between being rigid with regulations. Regulations are important because they provide certainty, but when they're too rigid, it does not allow for the innovation to take place. So we need to have that balance where we take a look at creating that relationship between flexibility when it comes to trying to be more clear with the data requirements, the frameworks. So all of these require operational flexibility. Yeah. And just to also sum up with everyone, the idea of institutions doesn't need to be personalized. You want to have a 5-year plan, regardless of which government comes in. This is the plan that is accepted in Parliament, and therefore there is a monitoring mechanism that takes place so that you're not just left as a private sector with the uncertainty related to whether it's policy or projects which you can be involved in.
I didn't mean to go around this table in a sort of geographic sort of way, but I think I have managed to do that. So let me move into a slightly different, the zone that we haven't explored yet, and get the thoughts of the Honourable Paul Chan, the Financial Secretary for the government of the Hong Kong Special Administrative Region of the People's Republic of China. You've advocated several strategies for Hong Kong to maintain its competitiveness in the global markets. Yeah. I just wonder, firstly, could you just share your thoughts on the trip that Donald Trump has this week to Asia? I wonder if you can just give us a perspective from your point of view on the relationship between the US and China in the first instance, but secondly, and keeping perhaps more to the focus of this panel, just your sense of the risks and rewards, the needs to ensure, when we look at these public-private alignments, the need to ensure that there are sort of shared values and opportunities at the back end of these projects.
Yeah, thank you, Becky. Thank you for the invitation. It's an honor to be with this distinguished panel. On the US-China relationship, I think the talk has been going on from the Chinese side, obviously taking a very pragmatic attitude to find solutions, to find common grounds. And despite there are certain competition in certain areas, but on the other hand, there are areas that we can work together. Say, for example, climate change. Say, for example, how to use our respective economic strength to help the global South to prosper. How to stimulate the AI development to the benefit of mankind. So I think there are a lot of common grounds that we can work together. Coming back to PPP, public-private partnership, our experience is that we must take there's no fixing one formula fits it all. No, we must be flexible. And we must be conscious of the fact that we need to come up with something which are win-win situation, also good for the business. So say for example, for infrastructure development, for the Cross Harbor Tunnel, we use BOT. You build, you operate. After a number of years, you give it back to the government. And within this period, they earn a reasonable return and even a decent return. That is one model. But railway development, say for example, capital investment, very heavy at the upfront. And it is very difficult to make money from the railway operations because this is public transport. So how to make this with incentive to the private sector? We adopt a model of railway plus property. So you build the railway, we do the calculation and the projections on an open book basis as to the projected passengers, projected revenue, and the shortfall in terms of return on investment. Then along the railway, we are happy to give them property development rights at the different stations so that they can use the development profit to cost subsidize the railway operation. That is another model. Lately in Hong Kong, we are embarking upon a very massive project called the Northern Metropolis, which is about 1/3 of Hong Kong's size. And the vision of this Northern Metropolis is not just for housing accommodation, but as a hub for our innovation and technology sector, because we believe in the coming decade, this would be the basis of competition. And this will also enable us to diversify our economic structure, to offer more quality jobs for our people. So in doing that, we take a multi-pronged approach, attracting strategic enterprises, doing co-investment with them, more flexible in terms of land grant. And we have a company owned by the government, which the function of which is patient capital. We call it Hong Kong Investment Company. So if you come, you bring along your technologies, you create your employment, meaning that it is not simply a financial investment, but with social impact. We are happy to come in as co-investor. We also use this company to work with fund management companies to set up different funds, strategic development funds, innovation and technology funds, so that we use this company as a lever to leverage private capital to the sectors that we want to develop.
Thank you. Masahiro Kihara, you're President and Group CEO of Mitsuo Financial Group. A key player in the global infrastructure financing landscape. As you listen to the points that have been raised around this table today and the discussion that we're having, what's your perspective?
Well, thank you very much for having me, and Your Excellency, thank you for having all of us here. I would say that as a bank, it is important for us to figure out what is the strengths that each of our clients has. And we have clients all over the globe. So what are their strengths? and make sure that that strength is leveraged from a public-private perspective. Now, Japan is also trying to drive this public-private thing, and we have figured out what are the strengths that Japan has that we can have a competitive edge, so that we can be a little bit self-sufficient. Having said that, I think a country cannot be self-sufficient for every aspect, right? And you have to collaborate with nations. And for us, I think it is important to connect the strengths, the Japanese strengths, to other nations' strengths, Saudi Arabia's strengths, so that you can get innovation, you can get sustainable growth around the globe. And I think that's very imperative for us as a global financial institution. I'll stop here.
Thank you. You did me a favor. We've got 10 minutes left, and we've still got to take first comments from two of you. Dylan, your perspective.
Well, I come from a part of the world where public-private partnerships have been there for a long time.
10 seconds.
Because it's been needed for economic development of countries. So I would say that the first thing you have to do if you want to have effective public-private partnerships, and by the way, it's going to be more relevant in this new world because of the need for governments to manage their fiscal balances, given what's been happening in the last few months, as they think about social programs and yet think about infrastructure needs, to invite private capital to come in side by side with them to deliver the infrastructure that's required to uplift communities and get economic development up and going at a decent growth rate. And I think that the first thing governments have to do is to figure out the policy framework that makes it conducive for capital to come in side by side, domestic and foreign. And that means that you have to have a very clear governance framework together with that, because ultimately it's a question of bankability. And that's important because the ultimate ability to get capital in, foreign capital, which is equity capital and therefore risk-based capital, is to effectively reduce the cost of capital on a project. And that means risk-based approach to reduce the cost of capital. And then you will see capital coming in and on a more regular basis. And so the idea of incentives is one thing, but the idea of what is the output and the use of the output is another. Now, in this environment today, the traditional markets are being upended, because we don't know how it's all going to settle down, because the globalization that we've gotten used to has moved aside, and we have to relook at a new globalization. Nobody knows how that's going to look like. Is it multilateralism, plurilateralism, coalition of willing? It depends on which issue and what you want to look at. It doesn't matter. There's opportunity everywhere. In that environment, I think every company, every government, every investor has to be a networked organization, because you can't get anything done without partnerships today. And cross-border is a very important element of that. And therefore, I really do think that many parties are going to be involved in this, especially if you think about energy, energy security, energy affordability. And I do agree, natural gas and nuclear has to be part of that discussion, and not just hydro or solar or wind or offshore wind or whatever it may be. I actually think that the whole issue of this opportunity is that infrastructure is going to be needed. You're going to be able to create industries around it, and you're going to be able to create jobs. And that's very important for countries. If countries can focus on that, bring in multilateral development agencies to help them with the policy framework, make sure you have clear government framework to encourage domestic and foreign capital, I think you've got a winning proposition.
So as we get to the sort of closing few minutes of this panel, we've been discussing how public-private power brokers sort of forge effective trust-based partnerships that can bridge competing interests and genuinely create pathways to sort of, lasting global prosperity. Lei Zhang, let me just bring you in. You're founder and chairman of Hill House Investment. Can you just explain your experience in joint ventures with public or semi-public institutions?
Absolutely. My answer to that is very simple, which is follow the entrepreneurs and follow the business builders. And they figure this out. And the environment they operate in, look at last few years, has been nothing but short of impressive volatility, if you will, with technology change, disruption, geopolitical. Entrepreneurs, they adapt. They are resilient. Somehow, they can actually turn around, make the technology that's supposedly disruptive to be enabling technology. I'll give you some examples. One of our company we invested is a shoe retailer. Shoe retailer, you know, like footwear, supposedly to be the dinosaur of the businesses. Somehow they figure out to quicken the supply chain. Now you can see a pair of shoes within AI design. You can get it within 1 week, even that shoe didn't exist before. That quicken that supply chain, reduce the inventory days, stay close to consumers. This is where technology can actually help closing the gap between the companies left behind and the advanced technologies. So I think if we could you know, follow the technology, follow the entrepreneurs, they could be the technology disruptors. They could be the company who leverage technology to make things better. So if you ask me, there's only one investment strategy I could do. It's very simple. That if we could invest an index, what they call human ingenuity index, that we should go all in for that, human ingenuity index.
Saudi loves a new index. There you go. There's a suggestion of one. We've been discussing with some of the world's most effective power brokers how to keep this sort of fragmented world from fragmenting further. I'm sorry that we haven't had an opportunity to get around the room more than once, around the table more than once, but very much appreciate everybody's thoughts. And I just thought with the last couple of minutes, I'm just going to, Excellency, give you an opportunity to provide some closing remarks, if you will, given what you've just heard.
Well, I think we've heard a lot of nuggets and really the pillars of what partnerships and what investment today needs to be. And I would have to say, just we in Saudi Arabia realize strongly that public stands, the government stands for the public. So we realize that for business people, they have choices. Even Saudis have choices to invest abroad, but certainly international investors have choices, and the world is seeking capital and providing the kind of risk-return trade-off that everybody will go for. And we try to reduce the risk to the maximum extent possible. So risks that the government can neutralize or own, we own it. Risks that are related to the market, execution, technology, obviously the investors own it. We're committed to reducing barriers to doing business for Saudi, international, regional investors. So ease of doing business keeps us awake at night, and we have skin in the game. Not just money, but execution. I think, as I mentioned in my first question, if you want a country that can co-execute, co-plan, co-develop, co-innovate with you, and I'm sure some of you who have invested with partners here in the kingdom. In fact, when I talked about the tremendous numbers we have deployed in investment to get to where we are today, a lot of those investments are globally leading in terms of quality, in terms of competitiveness, and they have been driven many times 100% executed by some of the greatest companies in the world who are Saudi. But we're happy to partner. I think the key of the 3 Ps is partnership, and I've heard it from each of our colleagues. We do it here in Kingdom. When we do invest abroad, it is the key. And trust is something that, you know, there are a lot of things that come from your pockets, there are things that come from your brain and from the technologies, and there are things that come from here. And if you've dealt with people like we have, because we've been in business as a kingdom for close to 100 years, we know who are the partners we can trust, where we don't have to spend a lot of time looking at the fine print of contracts. And I know I have some lawyers on the table that I will not say, but we want to reduce the business of the lawyers and increase the entrepreneurs and the technologists and the innovators who can co-create that future.
And to that point, and you're sort of underscoring, you know who your reliable partners are. I'm going to just ask you, in the last 60 seconds, you will be in the States 3 weeks or so from now. What are your expectations for His Highness's, the Crown Prince's trip to Washington? I know that there were many agreements to agree made in May. What do the activations look like across which spaces, which sectors, and what might this audience anticipate?
Well, I mean, when we talked about what are the strengths for the kingdom to invest with and to invest in. I think one of our strengths is we are connected globally, geopolitically, economically, socially, people to people. And we have, as I look around the table, from China, Japan, Singapore, to Africa, where we have deep, deep-rooted relationships. And Aliko mentioned we were together not long ago, a couple of weeks ago in Senegal. But since then, I've also been to Japan, and I've been to Korea, and I've been to Central Asia and Uzbekistan, a country we love, and Tajikistan. I'm frequently in Egypt. And of course, the United States is our longest-lasting partner. And by the way, I spent a long week, including time with the Honorable Paul Chan in Hong Kong 6-7 weeks ago. Our relationship as a country, forget about my travel schedule, are deeply rooted. We have a strategic partnership with China, but you'll go back to the 20s and 30s to find the roots of our relationship with the U.S. The U.S. is the biggest investor in the kingdom. Our currency is pegged to the dollar. Our income is mostly earned in dollars. Our global investments are concentrated by virtue of our own interests in the U.S. We had President Trump is a great friend of the kingdom, the Crown Prince. I think that's been documented and proven. And he chose twice when he became president to make Saudi Arabia his first. This is highly valued, but it's also, we believe, in the interest of the United States to have in the Middle East a stable partner, an enlightened partner in the person of His Royal Highness, His Majesty the King, but also in a government that is steadfast on what are its values and what are its principles, and that the United States can partner with in economy, in trade, in investment, in stability in the region, but also in the hundreds of thousands over time of Americans who came here and work, and this has been their home, thousands of companies who invest in Saudi Arabia at scale. And we heard about GIP, we heard about Dow, we have thousands of them. Many of them, just this week, we celebrated JP Morgan being here 90 years. Regional headquarters, and they have choices. Citi, 2 days ago with Jane Fraser, we also marked 70 years of Citi being here on the ground in Saudi Arabia and choosing Saudi Arabia to be their regional headquarters. So the trip, when it happens, will be simply continuing on building on that bedrock of relationship based on partnership and trust, common interests, common values, which is not exclusive to our relationship with the U.S., but certainly the U.S. is the longest lasting and the strongest.
You're the most consummate diplomat I know. Thank you very much indeed for joining us. Thank you all very much indeed for being with us today.
Thank you, Becky.
Wow, wonderful.
I like it. HII.
Attentions to this side of the room. If you can please turn your attention to this side of the plenary hall and take your seats, take up the front row here so you can listen in to our next conversation. I want to thank Becky and her incredible panel. I especially want to emphasize the words of His Excellency, this idea that the key to prosperity requires collaboration, but that the most important currency is trust. It's trust in yourself, and it's trust in those people that you are engaging with, as well as trust in the system and in the institutions that also play an important role. It is important that we have, as he mentioned, skin in the game, and that's what our members have. So I want to thank all of you for being here, for taking up our seats in the front row. So we've talked about geoeconomics, we've talked about public and private power brokers, and now our third pillar is, of course, what ties it all together, and that's finance. Behind every policy and every partnership, it's financial leadership that turns vision into reality. And to guide us through that next conversation, it is my great honor to welcome our next moderator. Her name is Sarah Eisen, anchor at CNBC, and she has an incredible distinguished panel of ministers for our board. We have His Excellency Ali Ahmed Al-Kuwari, Minister of Finance for the State of Qatar, the Right Honorable Rachel Reeves, MP, Chancellor of the Exchequer, United Kingdom of Great Britain and Northern Ireland. Welcome to the stage. And His Excellency Mehmet Şimşek, Minister of Finance and Treasury for the Republic of Turkey. Sarah, the stage is yours.
Thank you. Everybody has to turn this way in their chairs. I'm Sarah Eisen. I'm thrilled to be back here in Riyadh for FII and thrilled to be conducting what I think is one of the key conversations we're all having at the moment, which is this idea that globalization looks very different in 2025 than it did several years ago. And this balance that these policymakers before me have to do when it comes to sovereignty versus globalization, protecting your own citizens versus partnering with other countries. So I'm thrilled to have this conversation and kick it off, Chancellor, with you, because I am wondering how you are thinking about this balance right now and how different it looks today.
Well, thank you very much, Sarah, and it's great to be with you again. Look, for me and my government in the United Kingdom, our #1 priority is growing the economy. But we need to do that on a sort of a foundation of stability. And we do live in a more uncertain world. We can see that all around us, whichever newspapers and TV channels we watch. That uncertainty, whether it is higher tariffs, whether it is conflicts around the world. And that's why building relationships with our allies is more important than ever to build that security and resilience into the system. That's why in the United Kingdom we put real focus this last year on securing trade deals. The first trade deal to be signed with the United States, the comprehensive trade deal with India, rebuilding our relations with our nearest neighbours in the European Union. And just at the moment, and Your Excellency, we met this morning to talk about this, to negotiate a trade deal with the Gulf countries. And we're also working on a trade deal with Turkey, because we recognise that growth comes from being competitive, being challenged in markets by innovation, and trade is absolutely essential for that, as is investment. And Britain is very much open to investment, open for trade, open for talent, and open for business. And that's the message that I'm bringing with me to the FII this week.
Yeah, and I want to dive deeper in a minute into trade, into AI, areas that are ripe, I think, for collaboration and for opening, but also for protecting your own industry. But Your Excellency, I wanted to come to you on this. What areas do you protect and that do you focus internally, and which areas do you stress partnership and collaboration?
Thank you, Sarah. First of all, I'm so happy, so pleased to be again in the FII. It's a great conference, great attendance, great participation, and you know, I'm always happy to be in my brother city, Riyadh, and my brother country, Saudi Arabia. So, in terms of like, you know, I mean, now, I know there are so many challenges happening, you know, in the world in terms of like, you know, geopolitics and the tensions, and it's very difficult now to really, I mean, I know the globalization story have started many years ago. Now we're talking more like deglobalizations. But in my opinion, I think what Her Excellency, you know, Chancellor Reeves, you know, she mentioned, I agree with her 100%. You know, that really, you know, building direct partnership, you know, with the countries that you have, you know, important relationship is very important. And to give an example, I mean, UK, for example, is one of the big destinations of Qatar investment. We have more than 35 billion, you know, sterling pound, you know, investment in the UK, among, you know, other countries. But, you know, I mean, UK is a get, and we have signed an important investment in the sustainable, you know, technologies, also 1 billion pound, you know, last year during His Highness visit to the UK. So these building direct partnership is really one of the solutions. But in the same time, I think it's extremely important we strengthen
the multilateral organizations. I think what happened, we have worked so hard in the many years ago, to build a rules-based system for engagement. And I think we need to come back and rebuild and strengthen the multilateral organizations. And for the multilateral organizations, they need to be more focused and also sticking to their core business. So I think very important that we go back. In terms of protectionism, Qatar is open. We are open for business, we are open for FDI, and we have developed a world-class World Cup 2022, which gave us a huge momentum in terms of building the infrastructure and the brand of Qatar. Now we look forward to leverage on that and to continue our diversification journey. Qatar is one of the largest LNG producers in the world. However, our focus will continue also to be in the non-hydrocarbon sector. And to say that, the first 6 months, most of our growth, 5% of the growth came from the non-hydrocarbon GDP. So we continue to push, and in terms of business, I think we are very open. We don't want to, talk about protectionism. I think we need to work together with the whole world, and it has to be a win-win situation. This is what we believe, and we push very hard in terms of building partnership, FTAs, and also direct relationship, even CBAs, economic cooperations, or TBAs, like the one we have with Turkey in place today. So it's very important that we build this relationship, but at the same time, I think we should not ignore the rules-based system and the multilateral organizations. I think it's very important to strengthen them again. And
like IMF, World Bank?
IMF, WTO, WHO, all these organizations are very important because they set the rules of engagement for, relationship among the countries. And, I think the world has done extremely well with the globalization story. And I think we need really to reestablish that. I think doing it on your own is going to be very difficult.
Interesting. Should we go back to globalization? Your Excellency, how does Turkey approach this?
Well, I do agree with fellow panelists. Globalization has been a strong engine of global growth. We all know that 1 billion people were lifted out of poverty since 1990s, where global trade volume has gone up by almost 6-fold. So as Chancellor highlighted, we remain open. We continue to invest in regional and global integration because we do see benefits there. However, having said that, we are also looking at strengthening certain areas where de-risking is required, such as energy, supply security. In the future, I think with COVID-19, health and biotechnology areas. AI, while we remain open to collaboration, trying to lure hyperscalers, supported by AI, at the same time, data privacy, cybersecurity, these are critical national issues where you have to invest in competence. So really, while broadly speaking, we do see benefits, we have to address dislocations. That's where the social and political backlash come in, in terms of globalization. I think ministers of finance can do a lot. There are parts of country or sectors where significant dislocations happens.
Sure.
If we can address them, maybe the backlash, domestic, political, and social backlash against globalization would go down. So really, we're now at a phase of de-risking rather than completely deglobalizing.
Chancellor, I'm so glad that the political backlash was mentioned because you're all talking about being open and the benefits of globalization, but wasn't Brexit sort of a rejection of that?
I think Brexit was a rejection of open borders. But if you look at the UK today, when we did that deal back in May with the European Union to take down some of those barriers and indeed to introduce an ambitious youth mobility scheme, there was public support for that. And actually, the sort of worry perhaps that we had as a government that reopening that can of worms of our relationship with the European Union might be quite dangerous, actually, the response has been very good. For businesses, especially small businesses who face increasing red tape since we left the European Union, for workers who are now locked out of the jobs market in Europe, there are obviously huge benefits from rebuilding some of those relations. But also, inflation is too high in countries around the world, including in the UK. And one of the reasons for that is that there's too much cost associated with trade with our nearest neighbours and trading partners. But I very much agree with my friends about recognising that in the insecure world we're in today, building up our domestic capabilities, but also diversifying our supply chains is really important. We saw during COVID and after Russia's invasion of Ukraine that the prices went up because supply chains were disrupted. In the UK, we want to be more self-sufficient in energy, which is why we're investing so significantly in that. It's why, like other countries around the world, we're investing in data centers and technology and AI, so we are less reliant on others. But this is not about building walls, because there are many countries where we share values, where it is mutually beneficial to take down those barriers to trade, and that's what we're trying to pursue, with really positive impacts for jobs and growth in Britain. And in the end, all of the challenges that we've spoken about whilst we've been here, all of the panels today, and the point that you were just making, Minister, about public consent for policies. Well, public consent is a lot higher when people see their living standards improve. And to do that, you've got to grow the economy, which means boosting productivity. And so investing in infrastructure, investing in technology, both at the business level and at the state level, is absolutely crucial if we're going to have growth that actually delivers for people in all of our jurisdictions, because all of us depend, whatever type of political system you live in, that the people benefit from growth and can see the impact of it, both on themselves and on the services and the state of the public realm.
Your Excellency, I'm curious about your feelings on tariffs, whether they, and how they feed into this conversation, because I'm struck in the US talking to small and large businesses that I thought would hate the tariffs because it increases their costs. But what I increasingly am hearing is, I'm glad someone's standing up for American business, and so I'm willing to pay it. And there is that idea that it takes care of your domestic industry when you put on tariffs. How do you approach that?
Well, tariffs are one form of protectionism. And we know that in the long run, it doesn't serve humanity. But I can understand, the sentiment in the United States, or broadly speaking, in developed world. If you look at the last, again, 30, 40 years, with the emergence of China and other large emerging markets, I think a quarter of manufacturing jobs were lost in the West, speaking broad West here, in industrialized West. So a quarter of industrial jobs gone. Wage gap grew. I mean, wages in the United States in real terms have been almost stagnant. So I'm not trying to comment. So I can understand the backlash or the assessment of that sort that you've highlighted. But the reality is, again, those are the exact dislocations that could be addressed otherwise, which hasn't. And that created the type of social and political understanding and the backlash that led to emergence of the current situation. Well, we all know that if the engine of global growth, which has been trade, if it sputters, I think global growth may not be able to stay at about 3%, which is barely enough to increase per capita GDP globally.
So trade is necessary for that, I guess. Your Excellency, when it comes to AI and technology, how do you make sure that you have an advantage, but also have important partnerships it's almost impossible to compete now with what the US and what China are doing when it comes to investment and infrastructure.
AI is part of the strategies we are doing in terms of our diversification plan. And I think when it comes to AI, you have to invest in the downstream part of the AI. I mean, yes, data centers, everybody talks about data centers because, we have ample energy, in this part of the world, and everybody would like, to invest in data centers. Yes, data centers make sense, but we don't get into the bottom of AI, through the data centers. So the downstream side, and basically where we have national champions, like in Qatar, we can talk in the energy side and the LNG, for example, we have the advantage of the data and the innovations, in that field. Aviation, with the super airlines, in the Gulf here, Qatar Airways, Emirates, and, so we can really benefit from that. So the only thing we have to invest on is the human capital and the copyright and the innovation side. So we need really, to work very hard. And of course, we have to work with the partners, for this one. Speaking of, in terms of the disruption happened to the international trade. I think what happened, we had a very good system working together in terms of somebody's focusing in the innovation and the human capital, and the mass production is happening somewhere else. I think this has got disrupted. And I think it's very important to restore that. I think where we can really make a difference is really in the investment on the innovation part. And this is where we can make the difference. And yes, protectionism, you can be protected, but you can't be protectionist forever, because at the end of the day, technologies get to be known and they get to be copied. We have seen this in the past. So it's very important, really, to build on the business itself in the sense of the reproduction itself. So, and this is what we are doing. Qatar is really AI at the heart of our investment. Is a very important tool for innovation. And in terms of already we have the infrastructure, we have the telecom infrastructure, we have the energy, we can really make a huge difference in the AI. And already we have started partnership with the big companies, in the US, really where we can make a difference in that field.
You announced a significant investment in the United States a few months ago when President Trump came to the region. How much of that is going to go toward AI?
A big part of it. I think Qatar Investment Authority, they promised, $500 billion over the 10 years in terms of investment. I would say most of that will go, most of it is going to be in the technology and the AI, because we see the growth in this field. This is where the growth, and it's going to be rewarding. It's a purely in a commercial basis, and we see, now the huge growth we see in the U.S. economy is really coming from technology and AI, and we believe this is going to be the situation moving forward. So we believe this is one area we're going to really focus on.
How much time do you spend, Chancellor, on trying to attract investment and talent to Britain when it comes to AI? And what are your meetings like with the big tech companies in the US?
Well, we were really pleased when we had the US state visit to the UK a few weeks ago to be able to announce 150 billion pounds worth of investment into the UK. And that was primarily in AI and tech from Microsoft, Google, NVIDIA, and others. Obviously, it's a real strength of the UK. We have deep minds in the UK. I've got a delegation of business leaders with me this week, including spin-outs from Oxford and Cambridge universities. We're developing that corridor between those two universities to create a sort of, greater links and greater opportunities to expand those cities and their research capabilities and the businesses that come out of them. So we see AI in itself as a real positive growth engine for the UK, but also AI now underpins everything else we do. So if it's life sciences, that is underpinned increasingly by AI. Take financial services, or fintech is the big growth area there. And in the UK, we're blessed to have businesses like Revolut that are growing at pace, not just in the UK now, but globally too. So AI underpins everything that we do. And we're also bringing AI and technology much more into running government services. We're increasingly putting things into a government wallet, a sort of digital wallet where you can access information, starting with a driver's license and a veteran's card. So using technology and AI as well to improve productivity in government as well. And I sort of think that for many businesses, obviously the home market's always going to be incredibly important, but then you want a secondary market as well. And how the UK is positioning itself is the natural second home for businesses and sovereign wealth funds from around the world, because we've got some of the best universities in the world, some of the best startup and scale-up businesses. We've got deep and vibrant and liquid capital markets, and also those trade deals with countries around the world means that you can establish yourselves in the UK and then export with better terms of trade to pretty much anywhere else in the world. And so that's how we're positioning ourselves as a country. Let me just finally address the issue that you mentioned, Sarah, of talent, because a bit like what we've discussed around tariffs and those sort of barriers to trade, other countries are also a little bit more cautious around talent and migration. Now, in the UK, we need to do more to stop illegal migration, but we're very much open to the top talent from around the world. And just recently, we've doubled the number of visas for all of our global talent visas. So that's for high net worth individuals, graduates from the best universities around the world, and also for researchers, particularly in some of those growth sectors like AI and life sciences to our universities. And with no doubt we're going to fill those places on those visa schemes, but it's just another example about how in the world we're in, we want to be a country that is open to talent and trade and business.
Do you have to convince them that you're not going to over-regulate? I mean, when I think sometimes of the UK and Europe, the fear is that. Too much regulation.
On the contrary, by the end of next month, we will have passed the biggest piece of legislation I expect of this whole parliamentary term on planning and infrastructure. And that is all about ripping up unnecessary planning and regulatory rules to make it easier to build data centers, train lines, nuclear power stations, offshore wind projects, the cables to get the energy to homes and to businesses. Our Prime Minister, Keir Starmer, has also made a commitment to reduce the burden of regulation on businesses by 25% during the course of this Parliament. We've already started that in financial services by taking out regulators. We've changed the leadership team at the Competition and Markets Authority to make it more pro-business. And so, you know, we're differentiating ourselves as well within Europe as being a country that is ripping up the planning rules, tearing up unnecessary regulation to ensure that you can actually get things done in Britain. And that's increasingly the case. And I think investors, whether that's sovereign wealth funds, private equity, venture businesses, can see that this government is moving forward at pace with measures to grow the economy.
Good. Music to people's ears, I'm sure. Here, Your Excellency, how do you prioritize AI in a national strategy? And how do you, maybe if you could just work it in to figure out who your friends are when it comes to partnering with countries like China or like US on AI?
On AI, we are closely integrated with Western ecosystem, even though there are some components from other countries. I think the way we see AI and the whole digital transformation, this is one area where you have to be open, but at the same time, to some degree, sovereign, you know, it's one of those nodes that you invest. That's why we are trying to build our own Starlink, you know, low orbit satellites to provide internet. We're investing very heavily in fiber infrastructure. 5G Plus is well underway. We are investing in nuclear power plants to provide the base load for AI. So we're doing everything. In terms of human capital, we feel that we're blessed. Every year we get about 940,000 university graduates, and increasingly more in these areas. So human capital-wise, we're in good shape. Infrastructure, we're developing. And regulations, we did not join the European bandwagon in terms of Digital Market Act. So we've avoided that. And I think we want to look what's working before we move. So yes, we are investing heavily. It's one of those niche that could provide huge, you know, immense boost to productivity. So we are quite optimistic. But again, we're trying to lure some international hyperscaler, investments. Having said that, some of our regulations, such as trusted cloud, keeping data, while cross-border data is allowed, but storing data locally, they're telling us that that's getting in the way.
So it's, I mean, we're out of time, but it sounds like the three of you are all in the middle of negotiating deal, like some sort of trade deals with each other.
Yes.
Are we going to, was this helpful? Are we going to get this done?
Qatar, Turkey already
Yes,
done.
we are going to get that done, aren't we?
Qatar, GCC, UK, almost done, I should
Yes.
say.
Okay.
With UK, we're almost done. With European Union, we're trying to upgrade the customs unions that we have to expand it into public procurement, services, and agriculture. But I think we're more optimistic that our deal with UK will be concluded soon. EU is more complicated, typically.
It would have been cool if you announced it on stage, but that was close. Thank you all very much for joining the conversation, and thank you for being here. Thank you.
All right, ladies and gentlemen, I want to thank Sarah Eisner. Sarah, we almost closed the deal on stage. That was a good effort. I want to thank also His Excellency, the Minister of Turkey, for talking about AI, how they're investing heavily, and how also Rachel mentioned that they are getting rid of unnecessary bureaucracy that might impede progress. I want everybody now to swivel your seats to the middle of the room. That's where we're going to have the next Board of Changemakers on Finance. But before that starts, I have a poll for all of you. We have talked about whether a recession is possible, yes or no, and now we want to hear from you. So if you can scan the QR codes on the screen with your cell phones, we would love to get your input on whether a global economic recession is likely in the next year, yes or no. We have people that have started to vote right here. Thank you so much, sir, because we're going to announce those results during the next panel. So make sure to take out your phones and vote. And now, before our next board, let's please watch this video, everybody.
A great unraveling is underway. Tariffs and trade barriers are rising. These fractures are straining shared systems, from financial networks to energy grids, even to academic research communities. Yet, as old ties weaken, new alliances are born. BRICS now spans 10 nations, representing over half of humanity. Proof that fragmentation is not disintegration, it is realignment. As the world fractures, new centers of gravity form. We see the same pattern in our daily discourse. As debates polarize, divisions sharpen, but groups grow closer inside their own beliefs, united more fiercely than before. And here lies the paradox of fragmentation. The more divided we become, politically, economically, socially, the more we create new bonds. As investment and regulation accelerate, the question is clear. What is the new architecture of trust in a fractured world? In an age pulling us apart, true leadership will be measured by how we come together. Let us unite to unlock this paradox by promising to build bridges even as barriers rise, and by rejecting a future shaped by fragmentation to forge one of shared purpose, resilience, and dignity for all.
asking you. I don't know. So thank you, everyone. First of all, thank you to my wonderful panelists. I could not be more happy to be here. And then we put basically everyone in the audience to work because we have a panel. Mariana gave you clear instructions. And you know boards, they're a little bit competitive, so we're going to try and get more people voting for this than ever. So the question was very simple. Are we expecting a recession, yes or no? So I hope everyone got the QR code. And we'll see what that result is. But demographics, debt, deglobalization, of course, all set to weigh on the pace of expansion. Artificial intelligence may yet prove to be significant productivity driver, but its game-changing potential remains unproven at the macro level. Many see the long-term outlook for global growth may be uninspiring, but that also means there are a lot of challenges actually and opportunities for investors and certainly for financial services. So we have the results of the poll. Do you think a global economic recession is likely in the next year? 60% of people in the audience say no, 40% say yes, so this is good. We have an optimistic bunch with us today. Thank you all for joining us. So we have 55 minutes, 11 panelists, so let's get straight to work. Jane Fraser, let's start with you. When you look at financial services in general, how they will be transformed but also disrupted, if you look at AI and private markets, where will the biggest transformation come from?
So I think both are going to be transformational. And frankly, financial leaders, we're all going to have to win at both of them. Here's how we're thinking about it. On the AI front, it's probably the biggest shift, but it's in the longer term. We're just beginning to unleash the potential in AI at the moment. But it will be the rewiring of a lot of the global economy. It will be of financial services. And I think on AI, we can see it in 3 different areas. The one that's more immediate, which is the operational benefits we're getting. As we're replacing manual tasks, we're able to move data at greater speed. We're able to find anomalies faster. So the operational side, I think we're all beginning to see bottom line benefits. You have the revenue side. The one that's exciting immediately is personalization. People don't always say, oh, financial services, empathy. I think this is our opportunity to make some of the changes there. But it will change business models. It will change revenue models. I don't think we quite know how yet. And then you've got the risk dimension. And that's one where it's going to enable us to manage risk better, but it's also going to create new ones. And the bottom line for us all on AI is not whether it's going to happen, it's how thoughtfully and well do we execute it in our businesses. Private credit, that one is happening pretty quickly right now. We've got to decide, is this a tug of war or a team sport in private credit as banks? It's usually more fun to play in a team sport. But there's some areas where there's a zero-sum game. There's other areas where it's the benefit of both. Right now, it's not a huge part of the business model, but the inflection point is where private credit and AI meet. And I think that's what we're seeing in particular in the Kingdom, is how is the AI infrastructure getting built out? How are we going to finance some of the models that are out there? What's happening to the power equation? And this is where it's not easy. This is not cooker-cutting finance. So banks play an important role in structuring, as I'm sure you'll hear from all of us, different deals we're working on. And private credit is an important part of the equation. The world needs both of us. So let's try and make this more of a team sport and as big a pie as possible. Let's not be complacent. There's going to be winners and losers.
I like the way you put it. Is it a team sport or not? Venkat, what's your take on private markets, but also AI? Because AI could accelerate really quickly.
As always, it's hard to follow Jane because she just said all the good things. But I do think on AI, just to add first, it represents obviously a great general purpose technology which can have a transformative effect, not only in how we run ourselves, but how we present ourselves to our customers with empathy, hopefully. Equally, when we think about our workforce and our colleagues, it is an opportunity and a risk. It's an opportunity to create a much more dynamic, enabled, empowered workforce and help it manage the transition because some jobs will transition. It's a risk because if you don't pay attention to it, then you can end up with divisions in the workforce and more disruption than you'd like. On private credit, at one level, this is something that banks have been doing all the time. And when we think about a definition, at least the definition I like to use, is that it's credit that does not come through banks and does not come through the public markets. But it comes through lots of recognized players, insurance companies, asset managers directly, including what we call the private credit funds. And I think it should be a team sport. I think there are some things banks will not find it appropriate to do under their capitalization rules. Others should do it because the world needs the credit. And banks should work with them, either by financing them or even working jointly directly. But that's the best way to get credit into the economy.
Bill Winters, where does this balance of financing power actually lie between traditional and private credit?
I don't think it's a balance. I mean, I'll pick up where Venkat left off, which is that there's demand for credit and there's supply of credit. And different people are in a different position to provide different types of instruments. So banks are heavily guided by our regulation. It's a fact. And if I were a regulator, which I've dabbled on that side of the table from time to time, I would also be concerned about banks that are leveraged 8 to 10 times, that have a systemic role in many countries. And I'd also want them to operate with a lower tolerance for solvency risk than a non-bank. No. But how are things working out? The non-banks are much less leveraged than banks. They're providing credit, buying assets in a safe and sound form that presents, as far as I can see, much lower systemic risk than banks. That's good. It's good for the economy. But we need each other because they don't have tens of thousands of people, hundreds of thousands of people around the world scouring the market for good credit opportunities and providing the rest of the banking services that we all on this panel do one way or other, where we can understand that customer, that credit, and provide a broader range of needs. I mean, they don't want to build that infrastructure. And they don't want to take deposits. So, I mean, it's perfectly complementary. It's not to me about balance.
Chairman Mika, you also see new entrants because of fintech. So how do traditional banks actually deal with the new entrants? How does that change the landscape?
Okay, thank you, Francine. Well, let me take one step back to think about actually who we are. It was already 30 years ago when Bill Gates said, banking is necessary, banks are not. And since then, financial innovations have brought various new players to the market. Likewise, open fund, private equity, private credit, fintech players, and so forth. And indeed, now NBFI accounts for more than half of our global financial assets. So some may argue that the traditional banks are becoming less relevant. Is it true? Let me be a bit provocative by arguing against it. One, our access point to a financial service by the individual. The number of banking accounts held by 15 years above and has been increased from 3 billion accounts in 2014 to now 5 billion accounts. And the global account ownership ratio has also increased from the 50% to now 80% over the past 30 years. Two, banks have been indeed providing financing to fintechs and the non-bank sectors. For example, in the United States, the bank lending to a non-bank sector has doubled over the past 5 years. Finally, banks are even distributing the products generated by those non-banking sectors as well. So that all means the banks remain an indispensable intermediary. And with that, however, we happen to be complacent. And what we need to be conscious of and what need to be prudent is, as a responsible intermediary, upon the intermediation, we have to be careful about what we are going to intermediate in order to preserve the overall safety and soundness of the World Bank systems.
Mr. Al-Falih, how do you expect actually Saudi banks, but also broader Middle Eastern banks to change because of the disruption, which could be new entrants, which could be private markets, so what you're selling, and AI?
Francis, we are changing already. So when we talk about fintech or disruption or digital banks, I always respond by saying we are a fintech. We are a large fintech. We are a digital bank. So the advancement of the innovative solution that the banking sector in Saudi in specific, but at large at the Middle East, I think it comes in a very strong competitive advantage. And we are moving toward full automation. It is also time to unlock the wealth of data that the banking sector sits on and utilizing the AI to capture all the benefit that we see coming from the innovation agenda. Today, I'll be surprised if there is any financial institution doesn't take AI in the heart of their strategy, and that's embedded in every division in the banking sector, sorry, the financial institutions. So today, the winning strategies, the winning financial institutions, the one that embed and capture the best application of AI in terms of operational efficiency, risk mitigation, but also in the future, in the near future, the uplift on the revenue side.
Thank you so much. Mr. Takashima, how do you see it evolving in your country?
All right, in Japan. Well, first of all, thank you, Francine. And it's great to be back to the panel, all good friends of mine, and also it's an honor to be a part of you. And first of all, in Japan, similar changes taking place. And one thing I have to tell you is both for the development of the private asset industry as well as fintechs, we are a little bit behind. But the tendency or direction of all the changes should be the same as everybody just talked about it. But if I take a look at the situation here, I have to start to emphasize that the change is good. Change is always a source of the transformation. And there is a track record, a history of financial industries to take chance of the changes, to transform ourselves. But of course, this type of change is significant, but still I think there should be a lot of chances. I take that side of the coin. That is, we have to, what we have, the significant customer base, both for the corporate, consumers, communities, financial institutions, and the firms. I think that meaning is significant. To take advantage of those existing customer base, perhaps we should work together with private asset players and the fintech players, working together as a partner to deliver the better services. If we go through the direction, I think we see the more opportunity than the risks.
Jenny Johnson, as Franklin Templeton pushes further into, of course, private markets, but also private credit, what do you look out for?
Well, so just in the evolution of private markets, I mean, first of all, and Bill, you said it, right? Let's face it. I mean, it's not like banks just decided they didn't want to keep lending. The capital requirements changed. They couldn't lend at the same amount, and supply and demand, there became an opportunity which was filled by the market. And so that's where the creation of private credit, why it's evolved to be so big, and I don't think that reverses. So at Franklin Templeton, our job is to provide the greatest breadth of capabilities to our clients, whatever their needs are, and whether it's traditional fixed income or private credit, that's part of it, whether it's equities or private equity or venture, whatever. So all of those things have to be part of it. Where I think it's evolving, and the technology, I think, of tokenization is going to help in this, is that we need to figure out how to package this so that it is fairly accessible to all people. Today, it's really been just institutions that have benefited from private markets. And in private credit, there's an argument that it ranges about 150 to 250 basis points more in returns than a traditional credit that is liquid, right? But it's illiquid. But that's meaningful if it's in your retirement plan. And so I think what we're starting to see, and what Franklin Templeton's very focused on, is how do we package these? And in some cases, it's hybrid with traditional and private assets in there, appropriate products to be suitable to whatever a particular client's liquidity capabilities are or needs.
Thank you, Jenny. Ron O'Hanley, what do private markets actually mean for asset managers?
Well, I think that it's the entire panel has talked about. The role of private credit is to fill a need that the banks could no longer provide at the same level. I mean, what we saw in 2008 was a great concentration of risk on balance sheet. Regulators didn't want that. And private credit is exactly the opposite. It's the distribution of risk. And this is where asset managers come in. They can provide that supplement to the marketplace And I think what we've learned over the past several years, to the point about it being a team sport, is that banks have an incredibly important role to play in origination, can probably originate more credit than they can actually underwrite and keep on balance sheet. And this is where this partnership can come into a place. But it's also the point that Jenny just made. Until recently, the access of the retail or even the affluent investor to private credit has been limited. There's new structures that make that, new regulation that enable that. And frankly, there's had to be an enormous upgrade to the operations to be able to do this. Now, there's still issues with this in terms of how we think about liquidity and the liquidity mismatch. So I think this is where regulators and the market need to come together and really think about, do we want daily liquidity or do we want daily valuation? Those are two very different things. And we should be thinking about what are the real liquidity needs of the investors here. As Jenny just pointed out, retirement investors don't need to be getting in and out every day. And if you can have a structure in place that doesn't have that kind of liquidity need, then you can actually deliver the benefits of private credit to the retail investors.
Tony Alamulu, how do you see this developing actually in Africa? Again, is it private markets or is it just challenger banks that means that you need to look at transforming your institution?
I think the bank I chair on the continent operates in over 20 countries and has over 50 million customers. So we have a fairly good understanding of the financial landscape on the continent. First is that financial inclusion is a bit poor on the continent. Secondly, we have a great deal of informal sector on the continent. So the headache we have in Africa is slightly different. What we want to do is to use both methods, traditional, private markets, and digital technology to bring the market and grow a deeper market on the continent, because access to capital is difficult, and two, we need so much private global capital on the continent to help catalyze infrastructure development. We talk about AI here, but to fire AI on the continent, you need to improve massively access to electricity, which is a challenge on the continent. So the development of the private market on the continent has been there for a bit, but what we want to do while galvanizing resources, and this is a great opportunity to encourage everyone here, fund managers and allocators of capital. There's so much opportunity in Africa to invest in, but capital deepening on the continent is required. I would say that it's a combination therapy. We need regulators to have the right mindset. We need private global capital to find investable opportunity on the continent. We need traditional institutions, digital institutions, fintechs, all of us working together to harness. The challenge is big. We have resources, but ability to harness the resources and make the capital in Africa work for African development is, to me, a critical point.
Thank you. Sushantana, how do you see, again, this changing actually the landscape of your institution, but also do you feel comfortable with a lot of private money going into private assets?
Well, Francine, banks intermediate money. We take deposits, we either lend it out, we effect payments, or we distribute it, right? We distribute it to public markets, to stocks, to bonds, to funds and ETFs, or we now get involved in digital assets. So there's different layers of assets that we intermediate. But what form factor? It could be physical, it could be digital, it could be on the blockchain. But the point is, underlying all this is a strong element of trust. Who's going to put their money with you if they don't trust you? And if they don't trust you and you are very digital, then 3 clicks and your money's out. So as banks are regulated entities, we've got high AML compliance regulations, we've got liquidity coverage ratios, capital ratios, etc. Sometimes there is regulatory arbitrage between us and the fintechs, but it behoves us, therefore, to do what Bill Gates said, which is, stay relevant, which means whilst we have their trust, we have to improve on our form factor. We've got to be as good as the fintechs in delivering a great digital UX, but underpinning all that is don't mess up on the trust, right? Stay trusted, stay safe, so that they're going to keep their money with you long term. So all in on digitalization, all in on AI, but let's not forget the basics.
Yeah, and actually remembering the basics goes back, Chabalala, to liquidity. So how do you see that, changing on how ordinary, for example, investors can get their money out quickly if needed in some of the newer markets?
So Francine, first of all, throughout the continent, people follow the basics of banking, just as everybody has said. But let me tell you two little stories that will pull together the themes. First of all, there's a company called Optasia. It was started by a Nigerian Lebanese man who's now based in Dubai. The company has 121 million users. It operates in 38 African countries, in Southeast Asia, as well as in Latin America. They use 5,000 points of data, and they use those 5,000 points of data per user using AI to determine the score, the credit score of that individual. That business is going to go to be listed on the Johannesburg Stock Exchange, and one of our competitors, to take Jane's point, is going to buy 20% of that business. We have taken that business from cradle in 2013 to its listing. It's using infrastructure, it's using financial services, it's using our intermediation skills, and each player is playing the appropriate role in the transaction. The second story, and I'll stop there, relates to a company called Barlow World, which is owned currently by people on the stock exchange. The Zahid Group, out of this country, is in a 49% partnership with a local entity to buy out the company and take it private. Again, the GCC states investing on the African continent, each player playing their appropriate role, providing liquidity to the financial system, and using AI, using the infrastructure, and using the capability of financial institutions. The proposition, Francine, is that Africa is open for business.
Thank you so much. Venkat, you're a former chief risk officer, so you're perfect to talk about AI. We keep on hearing that actually AI could vastly reshape the way that banks, for example, take credit decisions. Like, how do you see AI enabling the bank to do better whilst keeping everyone safe?
Yeah. I'll never live this down. I think the mechanics of underwriting credit and how quickly you can do it, how much information you absorb, how you keep it up to date, at the first blush, all of that can be transformed by AI. We're doing it. Then, I think there's a set of decisions you could make in credit which are relatively automatable, generally small, generally alike. So, a mortgage of a certain type, a loan of a certain type, credit card decisions. Then there are the very large decisions which require the more fundamental issues of client selection, understanding business models, underwriting the way a company has independent financial controls, strong financial controls. I think that's going to be human for a while yet.
And yes.
No, I agree with Fink in terms of banking sector being regulated, highly regulated, with many rule-based processes that can be totally automated and done by robotics or by AI. But human touch is really important, and important in certain decisions that definitely require the intervention. And looking at the AI, I think we need to be very careful because it looks very tempting when you look at the application in the financial sector of how much it can bring from an efficiency or uplift in the revenue. But I think you need to be careful in applying that, in ensuring that risk is always mitigated, ensuring also that your human capital is being elevated to be able to deal with what's happening on the AI. Technology and the human capital needs to be reskilled and elevated to handle any situation when it goes south, potentially.
I guess it has to go together. Jane, you were talking about AI, and I think that the number is incredible. You said that Citigroup, AI is saving your coders 100,000 hours of work per week by automating code reviews.
Yeah.
So what happens after that? Can you do more of that?
Yes. I think there's a number of different pieces where AI is really starting to make bottom line impact finally. So it's not just the shiny objects. I think I heard the cheer around our firm globally when we told everybody that they would be able to do the performance reviews. The AI tool we have will do the first draft of them. So there are ways to make it popular with your organization by eliminating some of the greatly dreaded annual processes you have. Agentic's the one that I'm seeing the big change, because I think the first wave of AI has really been this automation of tasks that have been heavily manual or error-prone. Where you start seeing a game change is agentic. So we work with cognition. Coding that had been taking our top teams, PhDs, a week and a half to do is being done in 3 minutes. And it's extraordinary, the quality. And I think the other change we see is, it's like washing dishes. When you wash dishes by hand, it's one process. The dishwasher results in a clean plate, but the way it washes the dish is completely different. And that's the bit that is difficult right now, is how do we get our teams to look at a process end to end and completely reimagine how they've done it manually in the past to now, how do you think about a completely different technology being applied to it? And that's why I think we're at the beginning of what this means.
Bill, you're also a veteran of the last financial crisis. And so when you look at some of the things that went wrong last time, I mean, how do you manage AI in a way that we don't replicate some of those mistakes?
No, I think we talk a lot about AI. It's central, and I think the comments of Jane Tark and others are spot on. But there's two massive technology changes that are going on at the same time right now, and that will transform finance in a very fundamental way. The first is AI, and the second is the digitization of money. Yeah. The digitization of money, and this isn't, and we're not talking about cryptocurrencies, we're not talking about stable coins, we're talking about everything that we do being digitized, everything in our lives being digitized. That calls for an entirely new financial infrastructure, entirely new. And some of that will be provided to us by third parties, and they'll charge a lot for it, as they always do. And some of that will be built ourselves, and some of that we'll build amongst ourselves. But the digitization of money, which will leverage AI tools, and AI will leverage this digitization, is a fundamental change in finance. And I've been doing banking for 42 years, and there's been two paradigm shifts in my 42 years. The first was the derivatization of all financial assets. That led to the financial crisis. I can tell you, when I was at my old place, JP Morgan, we did a lot of the early work in that area. It was great. JP Morgan is still doing really well, I think, as far as I can tell. And it kind of survived the financial crisis because they took this super powerful tool, and we took that super powerful tool, Chief Risk Officer, right? Here we are, at JP Morgan. They took that super powerful tool and used it prudently. Other people took that super powerful tool and used it either unwisely or imprudently, and for the most part, aren't there. And as we get into this new age of the digitization of money with AI, powerful tool will be used hugely constructively by most people, will be abused by some, and we've got to keep an eye out, and will be used incompetently by others, and we have to keep an eye out.
Yeah, that's a word of warning. Sushant, how do you see this developing?
I think the human aspect's important. First of all, you know, I think we all learn best by doing. And we're all going into this unknown space together, which means creating that sort of intrapreneur culture where, whether it's horizontal use cases of AI or vertical specialized use cases or agentic or generative or classic AI, it's let 1,000 flowers bloom, but put guardrails in and let's learn from everyone else's mistakes. But honestly, you know, looking at the human aspect, it's how do you then move people who are so used to doing a certain role, right? They were always in operations or call center jobs or writing credit memos, doing pitch books, your young analysts. How do you move all these people, and they're young, how do you move them to the next job? And often I think this is taking one step back to take 2 steps forward. It's all about attitude, right? It's not even about age, it's about attitude. And it's really, I think as CEOs, it behoves us all to make sure that our teams are ready to take this step back, unlearn, relearn, and start from scratch, right? And learn a new skill. But assure them that, look, you've got all these tools to help you in your new skill, If you didn't know how to be an RM, now you've got tools to help. If you couldn't do, you know, credit synthesis or whatever, or risk analysis, now you've got all these tools to help you. And so it's really the human and machine interaction and making it okay to fail and making those cultural mindset shifts. That's important.
Jenny, I know this is something that you also think about, but also then to each of you, how do you think your institution will change in the next 5 to 10 years, given all of this?
Well, I always say that here's the good news. Since my grandfather started Franklin Templeton in 1947, the mission of helping clients achieve their personal financial goals has not changed. So that's the good news. The better news is actually the tools to do it and customize it are even better. So we can do a better job at that. And so, you know, I look at it right now, and I two comments. On what Sushin said about the attitude, I jokingly say that, you know, my daughters are a singer, an actress, and a documentary filmmaker, so that when my son became a computer programmer, I was like, oh, thank goodness somebody's gonna have a job. But the reality is, that's a lousy job in the sense that it's not gonna be long. You know, today you need to program and use GitHub and it'll help. But there are apps like Replit where you just tell it what to do and it programs in front of you. And so back to that attitude and creativity, that's going to be incredibly important in the skill set. The curious mind, the willingness to use tools. And by the way, the younger generation are doing it every day naturally. We have to think about doing it. And so ensuring that our organizations have younger people coming in. And then I just want to point out, you know, Bill's comment on blockchain. Look, the entire rails of the financial system are going to be disrupted by blockchain. It is just, you know, we personally have a tokenized money market fund that's the only one that's actually natively on the public blockchain. It calculates the yield every second. If you own it, you're a hedge fund and you own it for 4 hours, 32 minutes, and 22 seconds, you're going to get that yield. You can't do that with a traditional money market fund. And what was surprising to us is how dramatically cheaper it is to operate this, such that when we think about financial inclusion, the fact that it's cheaper to do, we're going to be able to more broadly distribute it. And so I think it's going to change a lot of how counterparties work, but it's also going to drive down the cost, and it's going to generate a lot of innovation. And the smart contract nature that is involved in tokenization, you add that with AI, and it's going to be very, very powerful when applied appropriately.
Yeah. And we're putting your fund on our digital exchange.
Yeah. What's that?
We're putting your fund on our digital.
Yes, you are.
Okay, we're doing business here on the board as well. Tony.
I want to bring a practical perspective to this conversation. Sitting at this table and listening to all my colleagues here, AI is like a constant. It's like commoditized in some markets. But there are some markets like the African market. This is starting, but the rate of adoption is not great. And even the infrastructure to make AI work on the continent is lacking. And so as I sit here and listen to everyone here, I'm asking myself, what catalytic thing, one thing that we can all here do to help improve the AI penetration on the African continent? Because AI is the way to go. It's all about productivity, efficiency. It's about people, their careers, etc. It's about growing, achieving common good, and in fact, prosperity for everyone. AI is key. It's key, the way to go. So I think in our credit rooms, in our board rooms, as we make decisions about funding, capital allocation in particular, about asset investments, we should please encourage and support the infrastructure development in Africa. Because it's so critical. If you look at power, for instance, I talk about this always. Access to electricity is so poor on the continent. Over 600 million people don't have access to electricity. And we're talking of AI, data, etc. You need so much power to fire this. But something can be done and should be done. And AI and the FII is about prosperity. And prosperity is when almost everyone is carried along at the same level, at the same page. So let's see in our respective boardrooms any investment decision we can make, any credit decision we can make. I know my friend does a bit of that, and she does too, to support the infrastructure, AI infrastructure development in Africa.
Could I,
yep,
if I may just pick up on Tony's point. So just to take it a step further, the African continent has got geothermal in East Africa. It's got sun, it's got wind, it's got copper in the copper belt, it's got manganese, it's got the platinum metals, it's got coal, it's got gas, it's got all the minerals that the world needs for its transition. And so, Jane, how about setting up data centers in East Africa? The engineering is easy. You just dig a hole into the Rift Valley and the power pops out, and the copper is just up the road in the copper belt. However, as Tony says, Africa needs $100 billion per annum of infrastructure, but only raises about half of that. Yeah. And what is needed is a combination of banking, multilateral money, and private credit. For that purpose, to unleash the banking and the private money, we need some of the Basel regulations to be changed. Now, some people have insisted on putting the pen down. We're asking them to pick it up to reduce the risk weights associated with infrastructure projects in Africa. Just some lobbying there, Francine.
Completely echoing Sim's comments about infrastructure, but I want to come back to the AI and digital assets in Africa. You have outstanding AI applications in your bank. Yeah. You have outstanding AI applications in your bank. We have a few. Jane has a few. The talent in Africa is as capable as any talent in the world. You're not going to build the large language models.
It's more productive and it's cheaper as well.
Sometimes cheaper. But the no, I'm just saying that I think this is the greatest opportunity in Africa in our lifetime for Africa to blossom, and it's because you absolutely need the infrastructure. But the creativity of certainly the people we see and where we operate across the continent, as you know, the capabilities that we see, the entrepreneurial spirit to overcome some of the obstacles, including the infrastructure obstacles, is just outstanding. So I'm
And if I can jump in, and I think this is where Saudi is playing such a constructive role, and we've seen it in recent FIIs as well, that you know, the US and China have been lacking in different ways in supporting the infrastructure. I think the attention, the care that is coming from this part of the world in looking thoughtfully about how do we look at the right structures, what are the different types of infrastructure plays that can be made, look at what Aqua is doing in water in Africa. Like, they're on a mission. They're looking long term, they've got a vision around it, they're driving this forward. I don't want to underplay. We've talked about there's no transition without transmission. Water's important, the food's important. Saudi is playing a really, really important role, and many of the global champions that are emerging out of PIF and building out the ecosystems are also going to be critical partners. And I think we all see that and acknowledge that.
Thank you, Jane. Ron, Tony was talking about the pace of adoption of AI. This was more related to infrastructure, but in general, how are we overestimating or underestimating actually how financial services will change because of AI and disruption?
Yeah, I think this is evolving like many new technologies. All the attention is being paid on the actual hardware itself, and certainly that's where all the investment has gone. But I have to believe that all the value is going to come out of the applications. And I think the challenge for us here, most of us are running very large institutions, is how do we actually capture that value? There's about 150 years of management science that's being thrown out the window. And the challenge for management, particularly for the middle manager here, is quite high. Because I could believe the 100,000 hours, but how do you capture those? What do you do with 100,000 new hours? Do you just reduce your staff? Do you say, no, I actually want my staff to do more? So the real science here, in my mind, is thinking through, for a particular application, is there high, what we call high AI exposure, meaning there's lots that AI can do, some of these data-intensive, large language-intensive kinds of things. And the second thing is, what's the AI-human interface here? And so for things where the interface is low, like reconciliations, we do a lot of those. We do a gazillion of them a day, right? There's a big AI opportunity. There's certain things, though, where there's the AI exposure is high, but also the human intervention is high. So you think about investment research. You think about all the things that when we started our career, whether it was at a consulting firm or an investment bank, all the stuff we did at 4 o'clock in the morning, that probably can be done by somebody else. But then there's the things where you have to make a judgment on this, where actually AI is not going to be helpful. Some of the things you talked about, the creative side, but strategic planning, negotiation, just creativity, how we think about all that. That's what we're asking our middle managers to do now in terms of figuring that out, and how do we actually equip them to do that and empower them to do that?
That's a really good point. Mr. Takashima, how do you prioritize or enable your staff actually to prioritize what they need to do for transformation?
Yes, I think, yes, I agree, AI is a significant, enabler at the same time, disruptor for the existing services of financial institutions. But at the same time, I have to emphasize that it is customers, it is a society, it is a community who choose the services from all the service offering from the financial institutions or big tech or fintech players. That means I think it is coming back to the Sushan's comment. I agree with you. Human touch is very important as far as it is related to the existing customers who likes to continue the banking with some specific institutions, even though the banks are trying to implement new services based on, for example, AI-driven, automated services or otherwise. But some customers don't take it. Particularly, the wealthy individuals or the corporations who have very complicated needs. In those circumstances, I think it is important to develop the AI, the supported human, the touches of approach and the proposal and dealing with the customers. At the same time, of course, we have to also develop automated, AI-driven services. Sometimes, even in Japan, we are developing those automated services. For example, 24 hours, 7 days a week, AI chat type of services, in addition to the device, human-based advice, even for the various individuals. I think those type of things, there is still, we could work around to take advantage of the existing human resources.
Thank you. Chairman Miike, how do you see also, again, when we look at new entrants, given all of this, how do you prioritize? Bring it home. Yeah, you can bring it all together in 30 seconds.
Thank you. Very kind of you. But having heard lots of arguments, yes, AI is certainly a transformational innovations which we have to live up with. And we discussed so much about opportunities and some challenges as well. And I think that in my view, the biggest challenge is adaptation. We all have adapted every evolving technologies and innovation in the past. But this time around, speed of technological evolutions is unprecedented. Whether capacity for human beings could adapt to that speed of evolution is one challenge. And we know, as the CEOs and the chairman, we have to reskill, we have to retrain, we foster those talents within our organization. Yes, we do. The challenge would be then whether our customers could adapt to that speed of a technology evolution. We have to be responsible to engage our clients, our community where we serve, to be on exactly on this evolutions of a technology. That is what we have to do as a responsible financial institution. Thank you.
I have a comment on the human capital side. I think we are blessed in this country, among many things, of our human capital. We're a very young population, so we're dealing with young customers, and we have also a very young employees. The digital adoption is very high, which really enables the transformation, any technological transformation, to be much easier in our country. And I love it when I speak to young employees in the organization, and they kept asking us, what is the bank strategy on AI? What are we doing? What's next? When are you going to train us on AI? This is really a blessing that we've seen in this country, and I think this will enable us really to leapfrog when it comes to our innovation agenda in the country as well.
So I think I have 8 minutes left, and the FII were quite clever in having this idea of a lock and a key. I don't know if you've noticed, this is actually a key where, the platform. So this is the top of the key, and then it goes down like that. So let's just go around, in clockwise order. in what you are most optimistic about? So the key to unlock success for the next 12 months?
I think I did allude to it. I think we have the human capital power that will enable and make the transformation from an innovation point of view much easier. We have also an excellent ecosystem when it comes to innovation. So today, the public sector and the private sector partnership on innovation, it's at the highest compared to, I would say, other countries. And that's really will enable the success in our innovation transformation.
Tony?
For me, it's back to the same chorus. To some, it's about AI adoption. To others, it's about AI accessibility. We should, as a global community, play our own role in helping to create AI access so that all of us grow simultaneously.
Is that happening?
It's not happening. That's what I'm saying. That's accessibility. But for it to happen in some regions, access, infrastructure is so critical. The capital for that infrastructure is not available. We're sitting at this table, we have people who allocate global assets. I'm saying our capital. Let's see how much of that we can concretize or commit to deploying in helping to create the AI infrastructure in Africa that will help us begin to talk about accessibility, then adoption.
Jane, what are you most optimistic about?
So we're at this inflection point that we're talking about that's probably the biggest change in technology in our lifetimes. And at the same time, there's a bit of a feeling that the world, there may be another shoe to drop here from macro or geopolitical. We don't know where it will come. What makes me optimistic is how resilient and adaptable companies have been, consumers have been, humans have been over the last 5 to 6 years. There's been a heck of a lot thrown at everybody. And look at where the world is. So what gives me optimism is that we keep surprising ourselves. Let's keep going.
Very true. Jenny?
I'd say every time there's new technology, there's always this prediction of the demise of jobs, and we're going to have all this unemployed people. The internet had it. You look in history, it happens over and over. And I'm optimistic about humanity because we always find more things to do. And when you have new technology right now in companies that are growing in a growing economy, which I'm optimistic about, to Ron's point about what do you do with those 100,000 hours, you have a bunch of tech projects that you can't do, and now you'll be able to do as long as you're growing.
Yeah.
Well,
Chairman Mike?
innovation is always come up with to resolve the social challenges and the issues. So this time around, for example, Japan is suffering from an aging and declining population. AI could be used effectively to provide that solution as well. So I hope that evolving technology will be used to resolve the many social issues we are confronting these days.
I'm optimistic because I think this technology will lead to a real revolution in terms of the client and customer experience. And I think those that apply it well can truly distinguish themselves from others. And the willingness of customers to actually tolerate bad service will go to zero because they can see what those that are applying it well are able to do.
So question in the next 12 months, you said, right?
Yeah,
So,
then I'll ask you if anyone's
yes,
expecting a
yes.
recession, but for the moment, we're focused on the optimistic thing.
I'm optimistic about the Japanese equity market for the next 12 months.
Sitting here in Saudi Arabia, it's hard not to be positive about the momentum and the structural growth that you see around you. So, and as an Asian bank, I have to tie it back to Asia somehow. So I'm optimistic about the trade flows between Asia and the GCC. A lot to be done there.
Yeah. Big week for that.
Like Sushan, we see $59 billion from the UAE, 26 from Saudi, and about 9 from Qatar. We think there's more to come, being invested in private equity and in private transactions. And because Africa is getting healthier, wealthier, and more productive, and is in need of this greater infrastructure I was referring to, there are huge opportunities for anybody who's either facing retail customers or wholesale customers. We are open for business.
Look, I think there's tremendous opportunity from technology. I think we need to be bold, but we need to be responsible. bold in adopting it, responsible not just to the bottom line, but to all the stakeholders in society, including, of course, our own employees.
Bill?
I'll be a bit more macro. I'm extremely optimistic about the shift in the center of intellectual gravity from stability to growth. After the financial crisis, I think we over-index stability, we under-index growth. That's changing. We can't forget about the stability. That's hugely liberating for billions of people around the world. And the second thing to note about optimism is I think we're realizing the value of peace. And while we obsess quite correctly on the remaining incidents of war, we're in a very peaceful world right now, actually, by any historical standard. And I hope that the value of peace becomes even more clear. I think it will, and it makes me optimistic.
40% of the audience thinks that we're going to see a recession this year.
I disagree. I don't see a recession.
Does anybody agree, actually, with headwinds? No, we have a very optimistic board. This is like happy days. Venkat, any worries out there in terms of recession or a significant slowdown?
I mean, there are always worries at different points, but not of a recession, no.
AI valuations? Give me something. Do you
worry, Jane? There's going to be, I think, a statement of the blindingly obvious. There are going to be winners and losers in the AI. When we look at the amount of money that's going in, not all of that is going to be deployed effectively. But there is a huge need, like the infrastructure need, the data need. I don't think anyone's going to say it's been overbuilt, but not everyone will be a winner.
You just want, I mean, look, 2026 is not going to be a problem. U.S. debt is going to be a problem someday. It's not a problem until it's a problem. So I don't see any problems in 26.
What a wonderful panel. Thank you so much, everyone, for joining us. Thank you.
Thank you.
Thank you very much.
Take a lot of water.
Thank you.
All right, everyone. I'm sure all of that optimism has worked up your appetite. So I'm going to go ahead and send you off to lunch. Lunch will be served at the Grand Cafe. Please be back here by 2 p.m. We have a massive afternoon planned for all of you. We have the CEO of Aramco, the CEO of Snapchat, so many heads of state. You don't want to miss a minute, so come and be punctual because at 2 p.m. we're going to kick off part 2 of day 1 of the 9th edition of FII. Make sure that you grab your seats, everyone. Enjoy your lunch and network meaningfully. Thank you so much.